If you're someone watching the show right now and you're outside of the US looking for a better brokerage, listen up. I wanted to take a moment to mention today's live stream supporter, Vantage. Vantage allows traders outside of the United States to trade CFDs. You can trade everything from commodities like gold, you can trade US indices or global indices, and you can even trade FX all under one brokerage, and you can connect to MetaTrader 4 and trade directly on tradingview.com. Not to mention, they also have a really good sign-up bonus going on right now. So we'll drop the link to that down below in the chat as well as in the description of this live stream. Check out Vantage. Now back to the show. All right. Good morning, everybody. Welcome back to another live stream. Hope you're doing well. And yes, as mentioned in the intro, check out Vantage if you haven't already. There is the welcome bonus link that you can take advantage of if you are looking into that sort of thing. So markets are a little bit flat here this morning. Let me just pull up my my marker here. There we go. So we've got S&P 500. Let's just actually pull up our all markets view just to get an idea of how things are moving. So you've got stocks kind of rebounding from yesterday's back and forth nature. But I wanted to talk about something with the stock market rally that we're seeing recently. It is one of the most hated stock market rallies that I have witnessed. The only one I can think of that was more hated was the 2021. 2021, absolutely despised. And I want to talk about why that is. I also want to look at oil, which is one that I'm keeping an eye on for possible trade setups. I'm keeping an eye on oil. I'm watching Bitcoin. I'm watching stock indices in general. But I wanted to talk a little bit about this with you guys about why, you know, this recent rally in stocks is so hated. A big point or part of this hate towards this rally is that people were on the wrong side of it. We know this because we've talked about this many times. Go to market sentiment, pull up the put to call ratio. Look, back in April, early April, you can see 2 months ago, right? Wow, it's been 2 months like that. 2 months ago, the story was this thing's going to zero, right? The whole market's going to crash. That was the story. And what a lot of portfolio managers, a lot of investors, a lot of traders did is they sold their stocks. They sold the indices. They got short. They bought put options, which is what we're seeing in this chart here. A huge demand for put options flooded into the options market, suggesting that people thought that the stock market was going to crater lower. That was the sentiment. So it makes sense that when a majority of market participants, we can also see this in the investor sentiment survey, people were incredibly bearish. March, April, right? A huge amount of bearishness. What you're looking at right now on your screen is the investor sentiment survey asking people, how do you feel about the stock market right now, basically? And it's a weekly done report. And investors, traders said super bearish for a long time. Like this is very high levels of bearishness. We stayed over 50% bearish for I think like 11 or 12 weeks in a row. It was a record for how persistently bearish the crowd was. And so the reason I point that out to you is that people were super scared during all this period of time. So it makes sense that now that the market has rebounded, that people absolutely hate this rally. It's a natural feeling for people to say, you know, this looks awful. We're going to go lower. They sell their stocks, right? They sell out of their stocks saying this is the end. And then when the market rebounds, of course, people hate this rally. People sold their stocks at the worst possible time. That is unfortunately a repeated thing that happens in the markets over and over. People, you know, do the same thing with gold. People hate the gold rally when it's going up and up because they are caught short on it, right? But you have to be able to kind of separate yourself a little bit with this stuff. That's the difficulty with trading, is that people do have emotions. They do have feelings. Maybe they didn't like the president. Maybe they didn't like maybe they don't like big corporate America. Like maybe they have a chip on their shoulder as to why they think the market is overbought. And it's amazing. Like the comments, you guys might have seen them too. People like the bears, it is a really good depiction of this. The bears come out of the woods really big time when there's a market drop, right? The bears being people who think the market's going to go lower, 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 and they hate the stock market and they think it's going to go to zero. Those people get really loud, oftentimes right at the bottom of the move. So the way I see the stock market is, I think most likely the bottom is in for the year. I think we are much more likely to rally to new highs than we are to go back and test those lows. And of course, I could be wrong about that. There's never a certainty with markets, but I think price action is moving with some strong momentum to the upside. We have higher lows in this chart, higher lows. We broke out of this downward structure. Another big one is draw your Fibonacci retracements, and sellers were not able to hold anything. And they tried, right? Sellers tried to come in around the 50% retracement of this move, tried to hold it. Higher low comes in, buyers came in, 50% again, breaks up, come to that 61.8%. Are sellers going to hold it? Nope. Buyers broke through. So this to me is a clear idea that sellers, the market played gotcha on the bears, right? And it's not the first time, and it won't be the last time. That is a repeatable thing that we see in markets over the long term. Sure, there are bear markets. If you had done that in 2022, if you were bearish in 2022, you probably made a lot of money, right? That was a persistent bear market. If you were selling into those rallies, that was great. But again, at this point, where we are, price is telling you that momentum favors the bulls. And likely, I think we are headed back to that 6,100 level on the S&P. Likely, I think we break those levels and continue to move higher this year. Now, the key word there is likely, right? Because a lot of times people are like, they have a very decisive call. No, we're going to go back to lows. Or we're going to break to 6,600 this year. And that's where people get themselves into trouble, because they speak in absolute terms as opposed to just saying an educated guess. Like if you're somebody who's like, no, you know what? I don't think this is all over. And my educated guess is I think that if you break this 5,800 level, that we're going to go back deeper and that we may even possibly retest the previous lows. If you set up your way of thinking in that way, that's very different than the guy or girl who says, it's not over, it's going back to the lows. And they're so confident and they're staying out of the way of stocks, missing rallies. They're short the market's rallying, right? That's a different perspective. If you are bearish and you have reasons to be bearish according to your rules, to your strategy, by all means, do your thing. But it's different to be bearish just because you have a hunch that it's going to go back to the lows, because maybe you don't like the president, maybe you don't like I said, whatever your reasons are, maybe you truly do have valid reasons. But traders, investors, the wise ones out there understand nothing in markets is certain. It's all probabilities. It's all educated guesswork and risk management. So if you think market's going to go back to the highs like I do, I think we're most likely, we may have some pullbacks in the meantime. Like I think we could see these moves. And I love that idea, right? So if you give me those pullbacks, I think I'm going to take advantage of those pullbacks. But I think a lot of investors that have missed the boat are also going to look at those pullbacks as attractive entry points. So that's my thought on the S&P. I'm very bullish on them. My system has been and remains very bullish on Dow, NASDAQ, S&P. I'm looking at the Edge Finder, which is suggesting a lot of our indicators here, except for the manufacturing PMIs numbers that came in a little worse than expected. Most of our economic prints look solid for stocks. Sentiment looks pretty good, right? Technical reads, look pretty good. Seasonally, it's an okay time. Let's just take a quick look at seasonality here. Let's go seasonality, month-to-month seasonality. Take a quick look at, there's gold, but let's look at like the NASDAQ. So yeah, you can see June is historically a pretty positive month for the NASDAQ. So too is July. Do you guys, if you may have heard the expression sell in May and go away. It's an old Wall Street expression. Well, in the last 10 years, that's been a really poor strategy. In fact, you've missed some of the best parts of the year in terms of historic performance in the last 10 years. This is the 10-year average performance of the NASDAQ month by month. So when we look at, is this summer period likely to be bullish or bearish purely based on seasonality, which we don't look at only seasonality, but it's a consideration in what we do. If that's our baseline, May held up very nicely. June could also be a positive month. July could be positive. August could be positive. We just had a huge, huge rush for the door and a lot of people now buying back into stocks. I think that there was a lot of people who are now looking at this and saying, oh, shoot, I'm going to miss it again. And so any pullbacks, my opinion, are trading opportunities because a lot of people, in my view, are going to realize that the worst of this trade stuff is possibly behind us. I don't know that for certain. That's why this is an educated guess. I could be wrong. Something could change. Trump could say, never mind. We're going back on everything. And then it gets worse again. It could happen. But my perspective on it is I don't think that is the likely base case. I think the likely base case is that, the worst case fears that were kind of being expected over here are not likely to become, I think that was kind of a freak out moment as opposed to a logical new base case, right? Vampire says, are indices around the world, like the FTSE and the NASDAQ, somewhat linked? Absolutely. Yeah. No, there's high correlation, especially between, economies that are intertwined, right? The European Union, the US, UK, all these countries, a lot of the same inputs affect their performance, right? The trade partners between these nations, they trade with each other, right? They're very, very linked. If, we see big, huge disruptions to global trade on a lasting basis, not just, negotiations or whatever that are going on, if they actually go into place, yeah, that could negatively impact multiple places and their stock markets respectively could move together. Not to mention a lot of the allocators that put money into these things, the S&P 500, like big money managers, they're also watching the DAX. Like, so if I'm saying, okay, I want to de-risk my portfolio and I own the DAX and I own the NASDAQ, I may sell both of those. So that causes some correlation, right? Because I might say, okay, I'm going to sell the DAX, sell the NAS. I need to sell out of some of my stuff. Or maybe I'm feeling positive and I say, I want to buy the DAX, I want to buy the NAS. You see what I'm saying? So there is some positive correlation to risk assets is what you're asking about. Like stock indices are risk assets. So there's some positive correlation between Bitcoin, the S&P 500, the Nikkei, the DAX, the FTSE, right? So yeah, just something to think about. Markets at that level tend to move together. I'm long the Russell. It's a trade that I'm still in. This thing's kind of gone sideways in the last few days. Here's your 4-hour chart view. I'm still long. We had a nice pop to start the week and then gave back a lot of those gains. Now just sitting choppy here for the week, pretty unchanged week to date. And still like the Russell quite a bit. I think it has upside. I think the Russell could actually have a good bit of a catch-up trade on the other side of all this stuff. Once we get into the, less regulation stuff and low taxes stuff, I think those are the more positive components to the Trump administration. I think tariffs are widely perceived as negative. Well, clearly, right? The market really does not like any mention of increased tariffs, but the market certainly does like the idea of deregulation in corporate America and deregulation. I saw a comment, which is an interesting one. Everything is controversial, right? But the conversation was deregulation allows companies to be more corrupt. And there's a fair point on both sides. People say, well, if you regulate companies too much, it makes them way less competitive on a global stand. Think about this. If one country is regulating the heck out of everything businesses are doing and making it very hard for them to do stuff, and another country is not and letting them to just the free market just run wild, innovation is going to thrive with less regulation. This is why the criticism of the EU, which is a super highly regulated place, innovation, that's a criticism for the EU, is many people are like, they aren't as innovative as other places, like the US, right? And so it's an interesting conversation, but obviously there is a need for regulation. That's why, there is government in general. It's not an anarchy, because otherwise pure capitalism would be, super damaging, I would imagine. I'm not a specialist on this, but there's negatives to everything. There's pros to everything, but too much regulation, too little regulation. I think probably a middle ground is probably the sweet spot, as in most cases. Those most things, I would say middle grounds are most likely. Like, for example, too high a taxes, too low a taxes, probably, in my opinion, middle ground is probably a sweet spot. Anyways, for the economy specifically is what I'm talking about, right? Like how much you tax people, which tariffs are essentially a tax. They're just a tax to the consumer in a creative workaround way. But then you could potentially, where are we going to get those taxes taken off in other places? That's where we have to really think about that from an index perspective, from a stock market perspective. Gold here sitting up, down about 0.6%. Yesterday was up quite a bit. We saw a big jump in gold, back up to 33. What did we get up to yesterday? Did we get to 3,400? No, not quite. 3,390 or so. Seeing a little bit of a pullback here today. I mean, that was a really solid close yesterday. We take a look at the 4-hour chart. That was a good close. And the question here is, if you're very bullish on gold, like, check this out. If you're really bullish on gold, which I'm not, so this is not a trade for me, but if you were like super bullish on gold, I would imagine you're expecting this level to hold and for us to make a rush right up to 34.20. Because from a price action perspective, this looks pretty bullish. Like, we had this downward channel. Price broke out of that level of resistance that we discussed in yesterday's live stream. We broke higher, looked solid. Now we're getting the retest. Do we push right on up to that 34.20 level? I guess that's the question today. So why am I not bullish on gold? Why am I cautious on it? The main reason is because it's not on my system at this time. We don't have gold on the list of bullish or bearish assets. And if I take a look specifically, gold and silver scanner, yesterday this had some errors. It looks like we're sorted out now. Yesterday or today, if we take a look at let's just do a quick look at the gold and silver scanner. So I'm looking specifically right now. I've selected gold in the top right, I believe. Let me just double check. Okay, I can't. It's gold, don't worry, because I can just tell based on stuff. Yeah, it's down here. We also built some AI stuff here with like what bulls and bears are saying. Kind of a cool little indicator. Anyways, why is gold not super bullish on this system? Well, services PMIs were strong. That's bearish for gold. GDP growth came in better than forecasted at minus 0.2%. It was better than the forecasted minus 0.3%. It's bearish for gold. Manufacturing PMIs did come in weak. That's strong for gold. And inflation is cooling on CPI and core CPI. That's bullish for gold. NFP report came in strong. That's bearish for gold. Unemployment rate came in neutral compared to forecast, so that's neutral for gold. It's also at 4.2%, which is not particularly bullish for gold either. So I'm just getting a mixed read on gold. So it's not that I'm bearish on it. It's just that I'm not bullish either. I don't have a strong enough conviction to say, like for me to think about this, like, and I think everybody in the room should think about this. When you're placing a trade, like think about what you're doing. If a technical level just gets hit, if I only have technicals, and this might be different for you than it is for me, but let's say I'm going to risk $500 or $100 or $50 or $1,000, whatever I'm going to risk, whatever my allocated, my risk management tells me to do. If I'm going to risk, let's say $100 on this trade, it's $100 that I'm going to risk. I want to be clear as to why I'm buying something or selling something or shorting something. And although technicals are cool and fancy, a lot of the performance that I've generated over the years in my account has largely come from being on the right side of fundamental trends that I've spotted, not technical ones. Technicals are simply the red light, green light system for me in my trading. Now, again, you might be different than me on this, and that's totally fine. I'm not trying to downgrade somebody else's way of trading. If you're like, technicals are all I need, awesome. But for me, I need to know like what is happening in the world economically, geopolitically, that's going to drive the wind in the sail for this trade higher. And if I don't see a clear picture on that front, it doesn't matter what the chart looks like. Charts can be deceiving. I can easily trick myself into seeing something that's not there, or I could even have a technical setup that looks great just for the market to completely go like this, right? But I don't have any reason at this time within my own system to feel very strongly about gold going higher. Again, GDP numbers came in upbeat. I can go through the list very quickly. Services PMI, retail sales numbers came in better than expected. NFP, which we get fresh data for this week, that could change things here. But if I'm looking at gold and I'm saying, do I feel compelled? Do I feel very strongly that the probability of gold based on the economic data, which drives markets, if that does not look very bullish for me, there's an unlikely scenario that I actually take a trade on it. So for me, does that chart look cool? Yes. Do the fundamentals marry up with the idea? For me, no. Okay. So I just, and again, I'm not saying that you can't rely solely on technicals, or some traders rely heavily on sentiment data. Some traders, a lot of our traders that use the Edge Finder, they focus like solely on our tools that we've built it for market sentiment. So for example, we have traders who just love the put to call ratio. They love the COT data, and they love looking at the COT data history. They love tracking what institutions are doing. They love tracking what the crowd is doing. And that is their jam. And again, I respect that because I love sentiment analysis too. But it's not the only thing I look at either. I talk about this, I'm a broken record on this stream. I say this all the time, but my system is not a secret. I use a 3 kind of part component. I say it all the time. I use a combination of fundamental analysis, which is looking at the economic data. I use a combination of technical analysis, which is my red light, green light, and when I'm buying, when I'm selling. But sentiment analysis is also included for finding highly risk to reward favorable setups. If everyone on the crowd side is super bearish, I love that. That gives me extra points to get bullish myself. So the reason I point this out is that many traders in the retail trading space, that's all they look at. They only look at technical charts. Trading for many traders in the retail trading space is just pulling up a trading view chart and hitting buy and sell. And here's what I would say about that. Are there traders who do that successfully? Yes. But I would encourage you, because so few people on a relative comparative basis are then diving into fundamentals and sentiment. Very few traders are doing that. But I can tell you a lot of traders are struggling tremendously and running in circles because they're only looking at the technical analysis side. Now, again, can pure technicals work for some traders? Yes. But if it's not working for you, try what I did, which was I started listening to interviews with professional money managers, and I realized that they're talking very little about the technicals. They're focused heavily on fundamental analysis. company financials, what the Fed is going to do, what the economy is looking like. So I started recognizing this pattern. I started turning on, podcasts with notable money managers, super successful traders and investors, and they were talking about this. So all the YouTube trading gurus are talking about technical analysis, and all the super, super successful traders and money managers who manage money for a living, they don't sell you, anything. They're way more focused on just managing client money and, like the real world scenario like that. And they're all focused on fundamental analysis. Now, again, I had to be careful when I give this speech because I'm like, I obviously recognize, Nick, you're a YouTuber in the trading space. You sell stuff to retail traders. Correct. There's nothing wrong with doing that as long as you have stats. If you have stats for your trading, to me, it's valid to offer services. Anyways, the point is a lot of traders are only focused on this. And they wonder why they run in circles with technical analysis for 5 years without figuring out a profitable system. In technical analysis, you want to hear something really specific? I think traders that use technical analysis solely have a natural, like, this is super, super reading the tea leaves right here. But I think a lot of traders that have success trading purely technical analysis, something just works in their brain better than it does for other traders. That doesn't make you dumb or smart, but some traders just know the nuances of a particular chart very, very well simply by repetition. Like their brain recognizes stuff unconsciously almost about technical analysis. Like I think that if you're being purely mechanical with your technical analysis, like moving average crossovers, MACDs, RSI, like indicators, you can get, but like a lot of what technical analysis people are doing is super discretionary. What I do on a technical basis is pretty discretionary. Okay, so let me illustrate what I mean by that. Okay, my zones that I've drawn here are not 100% mechanically drawn. They're not drawn by an indicator. So there's discretion involved in what I'm doing. And if you say, Nick, discretion hasn't worked for me, I've done this for 5 years and I'm still struggling to find profitability because I'm trying to draw zones, I'm trying to do all that, and it's just not clicking with me. You're not dumb. Technical analysis is kind of an art, and some people are not artists with it. So let me tell you this. I don't feel like I'm a artist with technical analysis by any means. I use like the simplest stuff that I can. That was me. I'm not the person that's like, I can just masterfully, master this chart so perfectly that I'm just, by looking at it, I can tell you what it's likely to do. Some people have a better talent at that than others. What I found peace in was I can be more mechanical with fundamental analysis than I can be with technicals. Okay? So I know that was a deep dive on this concept, but that is truly where I found a lot of, content in my trading was like, oh, I get fundamental analysis. Like fundamental analysis, I can map out economic data charts like we've done with the Edge Finder, right? I can pull up this economic heat map, and I can get a pretty good idea of whether things are upbeat or downbeat, missing expectations, beating expectations. I can map this out. This makes more sense to me, right? I don't know if that made sense, that rant that I just went on, but could you guys just do me a favor? If that hit a nerve, if that made sense to you, if that clarified something for you on the technical, fundamental, and sentiment analysis stuff, could you just type 1 or put a yes in the chat? Just let me know that actually, because I don't know if I just spoke into a void or if that made sense with a lot of people. And sometimes I just ask the audience to give me a little feedback. Type yes or 1 in the chat if that clicked, if it made any sense. I oftentimes listen back to what I say in streams to see if it sounds logical, because there's been times where I'm like, dang, I really did not deliver that in a very logical way. Thank you guys. I'm seeing some yeses. I'm glad to hear that. Let's get back to some charts here. 9:30 open here. US stocks just opened up here. S&P 500 flat on the day. NASDAQ slightly higher. Russell up 0.3% today. Dow Jones flat. The Dow is sitting right here at a level of resistance. Very curious to see how this level plays out. See if we can break through that level. That would be another bullish leg higher, I think. If you get an NFP report tomorrow that's solid, like I think tomorrow, if you get good NFP report, that's just good for stocks. That would be my take on it. My first reaction to it is if you get good jobs report number tomorrow, that would be 3 in a row, better than expected NFP reports. We can pull up just really quick our labor statistics and go NFP. So in the last 2 NFP reports, we beat expectations, right? So the red dot that you're seeing on your screen within the Edge Finder, that's going to be your forecasts. And the blue bar is what actually showed up in terms of the reported number. So when we read NFP reports, right? I did a video on this. So if you feel underprepared for an NFP report, maybe Chandler, if you could help us with this. We recently did a video on the NFP report, breaking it down extensively. If you would like to understand NFP before a little bit more, maybe we can share the link to that video. And don't watch it now. Just pin it somewhere, save it to your bookmarks or whatever, and come back to that video after the stream, because we got some important stuff to talk about here today. But I would encourage you to search up. It might be easier for you if you just search up Trader Nick, how to read NFP. I did a video on it recently that I think might be helpful to some traders. But anyways, the last 2 NFP reports, we beat expectations pretty handsomely, like a nice hit in terms of 228,000 jobs, and then 177,000 jobs, right? So on Friday, we'll get the latest report. On Friday, we will get, I believe we're forecasting 130K jobs, so we're pretty much expecting a similar report. And we'll see what the revisions look like and what the actual jobs come out to be. So it's a big one. And I think that if you get 3 in a row, that's going to give a lot of confidence to this market to say the jobs market is not crumbling whatsoever. We did get a unemployment claims report last week that was higher than expected. So more people than expected filed for unemployment. But we did see a poke up in that previously that then came right back down. So this week's unemployment claims, I'm going to be very curious to see if that comes in line with expectations. We're now expecting that to come right back down to 232,000. We've got that number coming out 2 days from now on Thursday. So we also have JOLTS job openings happening in 25 minutes. It's a labor data week. So it's really an important list of stats that we're going to get this week. Because JOLTS job openings, here's another one, right? So let's take a look at JOLTS. So JOLTS have been declining here. This is the number of job openings in the United States. JOLTS job openings have been declining. I make this point, however, though, because before you get too terrified of this, we have been normalizing on the JOLTS job openings report for quite some time since the whole pandemic situation. So we were at this level. Pandemic obviously causes us to drop big time in job openings. And then we since then have kind of risen. And now we are kind of normalizing still. So we're still in the process of coming down. What we don't want to see, right, is we don't want to see us come back to this number and then start to really sink below it. That would start to signal weakness. And this is why I think that the job openings, like, this is where I think the Fed eventually wants to cut rates, right? They obviously want to cut rates as soon as possible, but they're waiting for inflation to keep cooling off. They don't know about these tariff things, right? So there is some hesitancy there. But as this data comes in, we'll see how job openings, impact this chart. But a lot of labor data this week, and it's a really important one. It's a really important one because, again, if you are if you're looking at job openings and these things continue to decline, as long as they kind of come back to a normal level and don't go too much further down from where they are, I think you still look okay. Like the labor data doesn't look bad. If we were, talking about 6 million or 5 million, 5.5 million, then I would say, okay, now you've got a serious contraction in labor data, but we're just not quite there. Unemployment rate also on a longer term basis, just on the trend here of economic data, still very low. We've been low unemployment rate for the last couple years here. Really, this was one of the, I would say this is what saved the day big time with all the inflation stuff, is that, we didn't really see a dramatic increase in layoffs. If you had gotten, this number ramping up following all the inflation stuff, that would have seriously been a problem. Because again, if we had high inflation and unemployment rates started spiking, but to the credit of the US economy, 2022, 2023, 2024, we held up pretty well. And where we currently sit, 4.2%, we've been doing pretty well in terms of unemployment rate historically. I mean, 4% is very low. It's a very low unemployment rate. Let's see if we can pull up another country just to give us a contrasting example. Here's the UK. This is cool. We can look at unemployment rate for the UK at 4.5%. It's also pretty good. Japan has very, very low unemployment rate. Look at this, 2.5%. This is part of the reason why the Japanese yen is considered kind of a safe haven, right? Because it's got a very, very predictable economy as opposed to some other ones that may be a little bit more volatile. They have low interest rates, low unemployment rate. Let's take a look at like Switzerland. You could see 2.8%. I mean, these are why like this level of very, very low unemployment rate is very much why those countries are kind of, such safe havens. Here's New Zealand at 5.1%. I mean, these are healthy numbers. Like globally, we're not looking like we have massive unemployment. Look at Europe. Back in we got up to 8.3% 2021 with all the post-COVID stuff. Really reeled that in. We're now looking at 6.2%, still higher than the US, but not terrible. I don't know if you guys like doing this like super economic data in-depth stuff, but I find it so much fun. Here's Canada. Canada's had rising unemployment. I would say this is a little bit more steady rise in unemployment rate and getting up to 7%. We're not quite, 6.9%, but that's pretty close to 7% unemployment rate. Still not like terrible. But just to give you some context, I saw this and I keep using this stat, but I probably need to update it. I think the long run average unemployment rate in the United States is like 5.7%. So with us at 4.2 being here the last few years, we're as low as 3.45. I mean, we have low unemployment rate relative to, US history. So really interesting. So, I mean, to me, that is when we look at like the dollar in retrospect to that, you say like unemployment rate is relatively low. There's a lot of pressure to the downside here on the dollar due to all the uncertainty around trade. But if you get those clouds roll away kind of effect, I do think the dollar and oil is another one could have a nice rebound. If we just put the trade stuff eventually behind us, I don't know when that's going to happen, right? But eventually, I do think that will cause a bigger rebound in the dollar, but I don't know when that is. And trying to call that is very tricky because, trying to predict what Trump is going to tweet next, be my guest, but I'm not able to do that. Euro dollar pulling back here a little bit. Yesterday, we had a lot of dollar weakness across the board. Got about 20 minutes till JOLTS job openings. Just wanted to quickly mention, by the way, guys, if you are not in our VIP Discord, we are doing something pretty cool. Hey, I got a message from Alan, who's just joined our analyst team here at A1. Just wanted to quickly mention that currently we are doing our biggest discount of the year on VIP memberships. So currently you can get access to all the trades being shared. So anytime I take a trade on the Russell, anytime I trade gold or silver or oil, if I'm trading FX, if I'm trading euro dollar, pound dollar, Aussie dollar, I trade ETFs, stocks, trade a little bit of everything. And all of my activity in the market is shared in my trade alerts service. Now, on top of that, we also have Alan, who I mentioned just joined the group. We also have Chris Pulver. Many of you guys know him from the stream. And we have Ivan as well, who we hung out with yesterday. So I'm just bringing this up because if you have not joined us and you're considering joining, now is a great chance to get 45% off of our memberships. And we do offer a lifetime membership. So you can come join us if you're like, this is my crowd. I want to trade alongside Nick, Alan, Ivan, Chris, all those guys, and be a part of our chat room. Many of the wonderful regulars that hang out in the live stream here are also members with us. So if you've considered becoming a member in the past and you'd like to trade alongside us and get notified anytime I take trades, but more importantly, why I'm taking trades, like I'm doing full breakdowns here. I have a journal where I'm writing all about things that I'm looking at. Like if that sort of thing, if you're like, that would be super beneficial to me to stay up to date with that. If you want to learn, this is the group for you. We are very serious on the educational side, on the insight side, thorough breakdowns on everything that we're doing. If that's something that would be beneficial to you, consider joining us because right now we're offering 45% off. Here is how you can get access to the group for 45% off. Send us a direct message on our website, a1trading.com, or click the link that's been dropped in the chat right now to send us a direct message and speak directly to our support team. They can get you set up with a lifetime membership for nearly half off. Like I said, it's the biggest discount that we do all year. So if you're thinking about getting a membership with us, do not miss the chance. There you go. Click that link, chat with our support team, and they'll get you hooked up with that discount price for live stream viewers right now. So let's take a look at yields here today. We've got the 10-year yield still flat. I mean, where we're currently sitting with yields, let's think about like, how are we doing on yields? Because this was a big one for the current administration. They're like, okay, we want yields to be lower. So since January 20th, where are we at? Now, what is the theory? Why do Trump and team, why do they want yields lower? Well, on a purely simplistic logical standpoint, it makes sense why everyone wants yields to be lower. We can pull it up. You guys know I love to do it. US debt clock. Anybody else ever look at this? It's mesmerizing and also terrifying at the same time. This is the US national debt clock, which is approaching 37 million. I wish. $37 trillion that the US owes. Who does it owe that money to? This is always a fun conversation because I'll ask you guys, who does the US owe all this money to? Does anybody know? I think they owe like half of it to me because I'll take it. I'm just kidding. But the national debt, who is it owed to? Who does the US owe all this money to? Historically, I'm a big history nerd, and this is something that has happened many times in human history. The top dog starts spending way beyond their means and starts becoming a borrowing nation. The UK did this, and it unfortunately led to, in the following centuries, significant decline. Not necessarily, like the UK is still a powerful nation and still a very prosperous one relative to many places in today's world. But could that be the future of the United States? Well, it certainly is increasingly likely if the national debt keeps going the way it's going. Now, national debt can rise over time. That's fine. Does the national debt rise faster at a much faster rate than our GDP grows? That, which is happening, is more of a problem. So that's where you have to be conscious of this stuff, right? So this is just going up and up and up. So Trump and team, the idea is the only way we're going to get this to slow down at the very least is to pay back at lower rates. So the answer is, who is it owed to? China, EU, UK, US Treasury, American corporates, investors. But this is the true answer. The biggest borrower is itself, the American people, the taxpayer, the, retail investor. So yes, this money is owed to pretty much the whole world. The whole world is owed by the national debt in the United States. So the theory is, how do you get that down? Well, the first things first, government bonds are how they borrow money. If that rate is like 5%, that is way more expensive to pay back at 5%. Doesn't sound like a big jump, but if it's at 4%, that 1% difference is a tremendous difference in how much we're just throwing at interest per year. So the idea is, let's stop the wars. Let's work with Saudi Arabia, get oil prices down, because oil prices down could lead to less inflation. Less inflation could get the Fed to cut interest rates. And cutting interest rates causes the 10-year to go down. We can borrow our money at lower. We can borrow back our money again. We can refinance, essentially, our debt at lower rates. That's the idea. Problem is never that simple. Never that simple. Other countries may not want to cooperate with war stuff. Congress may be too split to make certain things happen. It's just challenging. I don't envy being a politician. Everybody hates you. Half the world hates you. Half the world loves you all the time. But anyways, that is the theory in general. The question will be, and to at least the administration's credit so far, we are lower than where we started. If there was massive, tremendous risk to the national debt rising way quicker and people believed it was just going to be ballooning from here, this would be higher. But it's actually gone down a little bit, not very much. We made some progress, obviously, at the cost of the stock market, but we want to see, for the sake of the U.S. national debt, we do want to see this lower, right? That is an important piece to the puzzle in order to pay back our loan. It's like a payback debt, or to at least shrink the debt to GDP ratio stuff. We got super technical here today. Up next, I've got Alan Perez jumping on the stream here, and shortly we have JOLTS job openings. So I'm gonna throw the stream over to him. Just a quick plug before we throw it over to Alan. Guys, Alan is now sharing his analysis in our Telegram channel alongside myself. We have chart of the days being posted. We have analysis being posted, free giveaways. We have webinars. We have economic data reports and offers on our VIP membership. We have everything here inside of the group. If you are not in here, it's free to join. Take 2 seconds. Make sure to join the free Telegram channel. The link was just dropped in the live stream chat. It's in the description as well. Up next, we have Alan Perez taking over the show for a little bit. Stay tuned. He's up right after this. Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing, up to 90%, and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence to see if what they have to offer fits your trading style. For 20% off, you can use code A1T20. Again, that will be 20% off any of their challenges you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show.
Hey, Alan, I think your mic is muted. I didn't want to let you get too far.
You're right. It is. All I was saying was, OT, you're right. My weekly outlooks, I was away on vacation on the 23rd. I left and I didn't have any service for the whole week. I was in the ocean. So yesterday, Monday, I was on the live stream as well towards the end of it. And I was just catching up and just playing catch up just to see what I missed. And I missed a little bit, and I went over it in the Telegram channel this morning. It's free to join. You get my thought process or my opinions. And you guys can consider that in your trading. I like to include fundamentals a lot. So I'll basically go over that real quick with you guys. So the dollar last week, right? What happened, or what I found to happen, was the U.S. Courts went ahead and blocked or rejected some of Trump's tariffs. The market really liked that because it provided more certainty. A lot of that risk was taken away. But then they went ahead and started to appeal that, and so that's when the dollar faded. Now what we're seeing as of yesterday, if I can find it on Financial Juice, I was trying to find it earlier, but basically what happened, Trump went ahead and requested that all the countries come up with a final draft for tariffs. Now, if we look at price action, what has happened is whenever we see positive tariff news, the dollar really likes that. And so one thing that one chart that really reflects that is the dollar Swiss. Every time we get something positive for tariffs, whether it be that relief that we saw when the tariffs were taken away, we saw that big candle. And as of last night or yesterday when that happened, we've been seriously, since the daily candle opened, straight up bullish, right? We've had little red candles here and there, but we've been really bullish on things like the dollar Swiss. So how I would navigate that is I would wait for clarity tomorrow, because if we see no countries came forward, no progress is made, then we can't see a complete fade off of this candle, because the Swiss, the yen, and gold are safe havens. And so when there's uncertainty, people tend to flock to those asset classes to protect the downside. So Alan, you're not longing DXY. I would like to, actually. I think this level is a good level. So on my weekly outlooks, what I've done in the past is I've bought dollar Swiss here, took it all the way up to here. I got trailed out on this Fed meeting candle, took it all the way up to here, got trailed out. As of now, I'm not in any positions because I have some stuff going on that I'm switching brokers. I just started working with Oanda, and for regulation purposes, I'm gonna have a Series 3 and 34 with them. I can't have my live brokerage account, my trading brokerage account with them, so I'm just moving them. But so that's why I don't have any trades open. But if I were, this would have been nice. So I usually don't include trend lines in my trading, but this is really important. We've been on this downward trend line. We broke, retested, and we stayed above it here. And yesterday as well, we tested this trend line, and look, we're bouncing off of this level. This support zone looked like it was a fake out, and we've been trending upwards from there. If we get some progress in trade deals, I do anticipate that we at least test out this 50-day moving average at this 8,300 level. And then we have to see what happens right here. This to me is a roadblock. If we go past that, then perhaps we can go ahead and move forward upward. Also, why I think downside for the dollar Swiss is limited is because the Swiss National Bank does not want the Swiss franc to get too strong. They've actually talked about intervening at some point if that does happen. And so that's why, in my opinion, I think this could be the low, even for the dollar index as well, right? Because these are all correlated in some way, some more than others. But, the dollar index, I think this could have been the low, this 98 level that we just tested off of. With the tariff news tomorrow, we got JOLTS coming up in a bit, NFP coming up as well. We could just kind of stay range bound in this level here. If we break past the 100 again, then I could say dollar bullishness in the short term. That's my opinion for the dollar. Alan, how was the Bahamas? It was pretty good, man. You said DXY is going to 96. Yeah, if we get no deals tomorrow, if it's shaky plus a bad employment numbers, then if we flush this 98 level right here, this 98.5, then I could definitely agree with you. Where dollar could get another flush lower. But this right here, this priced in was the worst case scenario. Remember what happened over here was back and forth with China, 150% or something like that, something crazy. This is that worst case scenario. So in my opinion, for us to get a flush below this, we'd have to get something like that or worse. And I don't know how probable that could be, especially because I saw also as well that Trump did pause some tariffs on China up until August or some 31st of some month, which in my opinion, I interpreted that as good news. So, but yeah, it was great, man. It was good time off. I basically spent it with my family, and it was fun. August 31st. Thank you, Glenn. Thank you for backing me up. He didn't pause. He was forced to. I don't know. So I've been seeing, on the contrary, China's really struggling. You know, they've stopped printing out certain releases. A lot of traditionally in China, like traditional, the way they invest or they prepare for the future or their retirement, is a lot of their net worth is hold up in the housing market, in real estate. Whereas like the US, you know, it's pretty diversified. People, a lot of their net worth is in their home and then also in their, you know, retirement portfolio, 401k, pension, whatever you want to call it. For the most part, most Americans are invested in the stock market, so they're participating. In China, is the opposite. It's they're pretty conservative. Most of their net worth is tied up into their homes, and right now they're facing a housing crisis where, you know, for one, prices are coming down, and there's no demand to pick them up if you want to liquidate. So imagine you're in a position where your whole net worth is tied into one asset, and you can't even sell out of that asset, and the prices are dropping for that asset. It's not a good thing. So some say that, you know, U.S. is in a pickle. Some say China's in a pickle. In my opinion, this is a very conservative opinion, is that they're both in a pickle, and I think it's in everyone's best interest that deals are being made. And I think you know, that could happen. So that's my take on that. Most Americans are invested in the stock market. You know, like most people that have a job that's in the 401k or a pension of some sort, they're, you know, most people are invested in the stock market in some way. And I think also too, with companies like Robinhood or whatever that are, you know, actively, you know, their mission is to get more average people or perhaps people that don't have that ability to start participating. In my opinion, yeah, I think more Americans will be invested in the stock market. So most Americans have, if they have a home, they're diversified with the, you know, equity in their home, equity in the stock market, and other things. So Congress is too divided to know. More correction for indices, OT. I think so too. I think if we start approaching these all-time highs, we gotta, you know, not get greedy, because there could be new news flow that can send this thing lower. And I think a correction would be nice. I mean, we did see this pullback here to the 50-day. We've been staying above it. Perhaps we can find our way to the 200 if we just, you know, finish this off and it starts kind of coming over here. Maybe this could be the range that we hang out in for a while. So we never know. But if we just kind of chug higher, pray, you know, get past these all-time highs and continue, to me, that is, you know, bubble behavior. Yeah, I can take a look at the news. I think I have an all markets one. If not, I can do this. It's coming up in a minute, so I got to be kind of quick with it, huh? Where's the grid one? This one? Oh, snap. I don't want these moving averages on it. I'll be pretty quick, guys. All right, we got NASDAQ at the top, S&P here, dollar here. We'll put euro dollar in the bottom. We'll put 10-year yield, and then we'll put gold. All right, let's see what happened. Financial juice, better than expected. What, this is the daily time frame, guys. Let me get down to the 1 hour. Dollar likes that initially. Euro's continuing to taper off. It's pretty flat a little bit. I should have been more prepared. My apologies. Yeah, glad I got it. NASDAQ starting to rip a little bit on that. But yeah, also we have NFP coming soon. And one thing that was really interesting, and I agree with this because I've noticed this myself, but some economists say, really smart people that are saying this, is that this is going to be the last print of economic data that has not been affected by the tariff. So moving forward with the short-term tariffs that were in place, or the ones that are in now we're starting to see those figures being impacted by tariffs, and that'll give us more of a glimpse to like the effect on tariffs. So moving forward, I think data will become data, and they'll be reactive a little bit more. Because what I've noticed before is like, we'll get a high CPI print for the dollar, and the market would just not care for that, especially if there's something tariff related coming after that. Those traditional correlations weren't really in place. So it's interesting, and I'm looking forward to seeing how the correlations are going to be now. And because of that, I'm probably going to have to pivot or alter a little bit of how I approach things, just like how I did whenever this whole Trump trade went off and the tariffs were in place initially. We got bigger ranges, we got more volatility. So the way I reacted to that was lower my risk, widen my stop. So probably same thing that I'll do, just to be on the safe side until I get a feel for how things are going to be taking place. That's how I will approach markets. And for those that I'm sure you guys have known, but I am now in the Telegram channel and in the Discord channel, completely included in your membership. With the Discord membership, you'll be seeing what I do and how I approach it. It's pretty cool because I focus primarily on FX. Ivan is also really good at FX. He just hit some good trades as well. Nick really focuses on like commodities and indices, which is one of his strong suits. And then you got Chris Pulver that does pretty much everything super advanced, even option stuff. So I feel like it's a little bit of everything for everybody, and I think it's a good mix. So if you guys would consider joining, it's completely included in your membership. Hello, Ellen, my handsome friend. Hello, how you doing, man? James, good to see you. Good to see you. JOLTS came in better than expected. Really nothing going on, though, in my opinion. These are all pretty flat reactions. Besides like the intraday, right? If we go in the lower time frame, then yeah, you could see something crazy. But to me, that's noise. So let me go back down to the one chart analysis, and I'll take recommendations as they come. If you guys have some things you want to see. EU, yeah, James, I feel you, man. So one thing I posted in the Telegram channel is if we get a missing PMIs and EU holds up above this level here, then we could probably see a retest of this level. Now, this is the worst case scenario when it came to the tariffs. That's not happened. We did get the missing PMIs. We hold above briefly, but it seems like sellers really remain in control. So in the near term, perhaps we even target this 50% level in this range that we're in, or if we get down to this 12,600 level. But yeah, NFP has a lot to do with it as well. The employment numbers has to do with it as well. The US just saw a good print of that. And then also just tariff deals happening. If, more clarity comes into the US, things are settling down, then I could see more inflows into the US dollar, more risk on. And yeah, we could see this EU start to come down, which is something I want to see. I think me and James are in the same boat as far as that. Ivan, I was listening to Ivan as well. I think he is looking for a stronger dollar in the near term. I think if we look at the DXY, I think this is a low, and perhaps on the higher time frames, this is just the most recent, higher low. So that's my opinion on the DXY. We could get a little bit of range bound motion. We're definitely approaching that 50 level, so it could be either way. What usually happens is before a NFP print or something like that, there's a rebalancing or price just stays flat until after the print where there's more clarity into the market. So that's how I would approach it, is just wait for the actual figures, wait for tomorrow to see if the things are actually happening, and then wait for NFP to see if that's, continuing that what we saw tomorrow, or if it's contradicting what we saw tomorrow. So that's how I would do it. The whole DXY is a consolidation, means another wave down. Sure. Another thing that happens when there's a flip in trend is that an asset tends to consolidate as well. So, you know, higher trends, like on a higher time frame basis, it's very rarely just like a V-shaped recovery, especially long trends like that. In my opinion, you know, when there's a flip in trend, we do tend to consolidate and then continue forward. And then also too, just understanding the environment we're in. We're a very news-driven environment right now. Sometimes certain news takes a back seat, and it's more favorable to news flow, and that's pretty much how I'm approaching it. So we'll see. You know, best case scenario, safest way to approach it is to wait for after. Wait for after tomorrow. Wait for after NFP. Wait for money to, you know, position for what's next to come, and then you just ride that wave. Any chart markups that you guys want me to go over? AU, yeah, that's 24/7 betterment. Look at that. That's so hard to trade. You know, I'm not touching that. That's super difficult. If like look at this wick. I'm sure like once we hit this level, was that a strong body candle after that? No. Yeah, this is no man's land. I wouldn't touch this one. Euro pound. Okay, so we're getting some requests here. Euro pound, dollar Swiss, Euro New Zealand. So Euro pound, just kind of knowing that the euro is fading right now, and the pound's actually been pretty resilient. If we go to this right here, so just according to now at 9:03 a.m., one of the Fed said possible to one interest rate cut this year, depending on the economy. So depending on the economy, that kind of goes with what I'm saying is like if the figures moving after this week, they're going to be more, you know, giving a good picture as to how tariffs have been impacting it. I agree. If we see figures good or bad, it'll be a good indication of how the Fed's going to move. But what was I going to do? Economic. Where is it? I always miss it. It's under the heat maps. So Euro's been pretty bearish in their economic prints. They've been missing, while the pound has been really, really strong. And then mixing that with the current sell-off that we're seeing with the euro, I would assume that euro pound just reacted off of that resistance level. This one right here. Yep, it did. Mean reversion. Let's see. This could be, yeah, this could be a floor here. Something like this. Yeah, so this reacted pretty well. Target something. If you were in this trade, if you got in right here, where it was, you know, previous like 1-2 times it bounced off of this one, then it rejected it once, you could anticipate the second one. I would, if we're doing mean reversion, I would target somewhere about this 50. If we start to fill this pocket, then I'd get out right about here. Because I do think like on the euro, I don't think it'll be a straight drop down. I think we will get like a, you know, this flush, maybe a retest up here and then continue downward. That's how I would approach it. Yeah, it's a great divergence. And just the EU, what was it, last night, right? They missed their CPI print, came in cooler than expected. Let me fact check that. Yeah, their CPI came in cooler than expected. So yeah, it's Europe has not been as strong as the pound. So that's how I would approach EUGU. So there could be an opportunity for a re-entry here. I would wait for that one instead of just getting a market sell order right here, because then you have all this to the upside of risk. Another one was dollar Swiss. Dollar Swiss is a pair I really like. I think that the bottom was put in here We kind of, this support zone was a little fake out. We're now above it with a lot of momentum. We have this, if we just go down on the 1 hour, just so you can see how much it's been respecting this trend line here to the downside. We've been touching it here, and then we broke above it, and we've been staying above it now for the entirety of the initial break. And so now we're coming up here. I would anticipate maybe a test of this resistance level here, and then probably just some chop until we see NFP and more clarity moving forward. US oil. US oil, if we get above this level at the 64 handle, 65 handle, I do think there's a lot of upside for US oil as well, for sure. We've been just hanging out here for a while, and I think we can see oil break above it. I think if we break above it and we close above it, there's going to be strong momentum. If you're like one of those people that considers gaps, we have a gap here. We have this big pocket here on the daily. That would be something I'd target. Someone also requested, I got 3 minutes here. I have someone else coming on. I think Chris is coming on next. So I want to be respectful of the schedule. Let's see. There was one more chart. I'm missing it. I think it was one of the yen pairs. The yen pairs are yen's a safe haven. Dollars is the one that's getting all the heat. If we see tariff headlines coming positive, I could see dollar yen testing this 145, and we could break above it. But it's really tricky because kind of referencing this range or this level here, like this is an ugly level. I'm going to take this away. Where we're at, it's pretty hard to trade. I mean, you could even say something like this, but that's too intraday for my liking. I like to reference like the higher time frames, but I don't know, maybe something like this. We're in the middle of it, right? So it's hard to trade this. I would rather wait for a deeper pullback to the 140 if I'm going to long this thing, which I think we probably can. There could be something that drives it lower, but getting in right now, there's too much risk to the downside and too much risk to the upside if you're taking a direction. Let's see who's on the schedule for today. James or Chandler, if you could let me know once the other gentleman is on, that way I can head out. Let me know. Cool. Thank you, Chandler. Gold and silver. Aha, that's the one I missed. I knew I was missing something, a popular chart. Yeah, gold. I mentioned in the Telegram here that we could go ahead and reach this level, this 34.2 level. But we kind of missed it. We're heading down. I wouldn't really call it direction just yet. This could just be another pullback until we head up higher. You never know. When we're in the middle of a range like this, it's really, really hard to trade that. I would advise against it because you can go either way. Maybe just gold stays flat until we see more clarity into which way we're going, risk on or risk off, and then it'll shoot one way or the other. So, I think it'd take a lot for us to get back to these peak highs. I wouldn't know what would cause it to go up besides worse tariff news that we've already experienced. But, trading gold in this level is super hard. And I know a lot of people like to go very intraday, but I wouldn't touch it. We're like in the middle here. Silver, I could imagine, is doing something. Pull up LSLV. Nope. Silver. Whoa. So silver's already at all-time highs. And what would cause it to go even higher? I don't know. So I wouldn't touch it. Let's put some moving averages in here. This will be a good level to re-enter if you were, going to swing trade it. A test to the 200 would be nice. Yeah, this is how I would approach silver. We're already approaching the all-time highs, and kind of anticipating some kind of a bad scenario as far as like risk off would be difficult in my opinion. So this is how I'd mark up a silver chart. Silver's the only breakout you're waiting for? Yeah, I mean, maybe I'm missing something. That could be very possible, but I don't really keep up with the silver market like that. I think when it comes to like the metals, gold is a really good indication for me. Any other chart recommendation before I head out, guys? I'm trying to find some in the chat. Can't really find them. I did the yen, I did the euro, pound. Pound's pretty resilient. Pound, okay, there you go. So we'll look at pounds. I see a lot of pounds. Pound is really strong, right? We've kind of determined that already. If I'm going to the long side, I'm going to wait for this 3,400 level. However, I think that could be limited if we see that upside momentum in the dollar. If we see more confidence in dollar assets, then I could see this thing start to flip on us. But for the most part, pound has been extremely, extremely strong. And so I wouldn't fight against it on the bearish side. If you're thinking pound against the US dollar, shorting that, I think there are other vehicles to go ahead and participate in the bullishness for the dollar. Now, if we're going against the dollar and trying to short the dollar, I think the pound will be a good vehicle for that. But to go against it, I don't know. So if you're going against the dollar, I would wait for something like 3,400 level. If you're going short the dollar or long the dollar, then I would just consider a different currency pair to do that. Bitcoin's an interesting one. Bitcoin has made new all-time highs. We're at this 50. We'll see how this one looks like. But, Bitcoin has been pretty resilient to my surprise. New Zealand dollar, same thing. It tried to break out here, kind of failed. I think upside is limited for New Zealand. So, yeah, I mean, this was a really strong move up, right? And then we kind of just chopped around here. We're still at the top of that range. Yeah, New Zealand and the Aussie are pretty hard to navigate. James, are you coming up next? Let's see how NASDAQ is doing. Yeah, I mean, we have some bullish momentum here. Yeah, if we approach these all-time highs, I would be pretty cautious on a breakout. So if we get close to it, if I were in a position where I'm long the NASDAQ or the stock or the S&P, I would take profits around this level here. Just because you never know what news flow could really populate and drive this thing lower. Now, had we tested 200-day on the way up here, had we came even lower just a little bit, or tested this level here or this level on the way up, then I would say stay in the trade and wait for something like a breakout. But because we never really had that, and it was just kind of brief pullback buy, then that kind of gives me a little bit of cautious when I'm getting the U.S. equities. Rashid. I'm sure someone will get to that. There you go. There it is right there, Mr. Rashid. Lee James said earlier that if I'm watching platinum, no, I don't really watch platinum, to be honest with you. Not really at all. VIX has also just been staying below this 200. Really, like, pretty low. You know, we were in the 60s area. I don't know what would cause it to go ahead and just pop up. Alan, why are you switching brokers? So I started working with Oanda, and I'm going to be registered under their firm, the NFA. So I'm going to have my Series 3 and 34 with them. Just for regulation and compliance reasons, you can't actively trade within that same broker, especially if you're going to, be doing certain things. So I'm just going to be moving brokers, still able to trade, still able to do everything. But that's why I'm doing that. So I'm just in the process of getting the account approved and then moving money over. But yeah, a lot of cool stuff happening. H ball out, you're in the middle of that. You're also with a broker dealer or something similar under FINRA or NFA. Oh, you might examine August. I'll probably start taking the test in July, I believe, something like that. Start in June, take it in July. And I'm really happy because those are more currency focused exams. So I'm like trying to collect them all like Pokemons. I have the series 663. I'm gonna have the 3, the 34. I really want the 7 after this. I have the basic SIE one. I also have like the life insurance ones as well. You're gonna be in Europe? Nice. I heard the 7 is the hardest one, Chris. Yeah, I really want that one though. I should have took it when I was at my old firm. I should have took it there. They were willing to like sponsor me for it and give me all the material for it. But I was already leaving, so I've heard, one of my colleagues, really went to battle with the 7, and I really want the 7. Oh, Chris is here. My bad. Chris, I'll hand it over to you, my friend. Thank you guys for giving me your valuable time. I really appreciate it. You guys have a blessed one. Bye-bye.
Hey everybody, thanks for tuning in to today's A1 trading session. We love engaging with our audience, talking shop, taking requests, and sharing our favorite setups. It's about that time where we're going to review a bunch of indexes, stocks, currencies, gold, silver, Bitcoin, and pretty much anything else and share our insights. If you're wondering what trades I'm in, if you're wondering what trades I'm taking, and you'd like to see exactly how I'm trading everything, you can actually follow my trading signals. If that sounds like something you're interested in, we'll share a link in the chat and you can sign up. You can sign up directly with the link or speak to a support rep if you have any questions. If you're asking, what do I trade? Pretty much everything. Indexes, ETFs, stocks, options, futures, Forex, and crypto. Thoughtful analysis, active trading. Check it out. And now, back to the show.
What's happening, everybody? Happy Tuesday. Welcome back. Just had a couple chart alarms. I got a chart alarm going off on old Walmart hitting $100 today for a second. Walmart is up to 100.88. My covered call, I believe, is up in that region on Walmart, some of the shares that I have. So I have a collar trade on Walmart, 674. Come on, Spotify, you freaking turd. Get back below 670. It's still in a profit trap, but my gosh, man, don't go up. Come on. Walmart. Collar out to August with a $100 covered call. If it gets called away, that's still going to give me a couple of bucks. I think my break even's like $89. Let me go into my tracker here. So Walmart. Break even is $93. So I make $7 a share. 1, 2, let me see what those chunks of shares are. So $7 a share, 200, 200, 300, 200, 100. Oh, fudge. I think I fat fingered that thing. So 200, 200, 300, 200, 100. Oh my gosh, dude, I can't add this morning, I guess. Be quicker if I just added them up manually. There, 1,000 shares of Walmart at $7. So $7,000. If it stays above 100, I can also roll it. We'll see where we're at by August. SPY, what's going on here? That's a Friday trade. That's a today trade. Okay, this account. That's why I was checking my DTEs. So this account right here with a collar, we're at 593. I'm going to roll this collar again. Maybe I'll roll this out to Friday. So if I roll that beautiful bean footage, so I can roll this out a day. What's Friday? The 6th. Friday is the 6th. So I can roll this out, grab another 120 bucks or so. Let's try it. Let's try 120, or let the weekend. I'll let the weekend marinate. Let's go to the 6th. Let's go to the 9th. So let's roll the 9th. So the 9th, sit it over the weekend. Still keep the strikes the same. Can I roll the strike up at all? Make another 100 bucks, still get credit. Roll this up. That's break even. So I can roll this up $1, get another 70 bucks. So this increases by $170. So you might roll this collar for 70 cents. Let's try this one. 70 cents. Hey, not 79 cents. 69 cents. My auctioneer voice. It's terrible. All right, all right, just filled that for 69 cents, and that gives me $169 extra income by a Monday roll. So SPY, let me update this one. Okay, so now that break even rolled to 6/9 expiration. 584 by 570. I want to look at the debit on the 570 because in case this were increasing in value, it's a 29-cent debit. So just in case if we had like a downward move in the S&P and this 29 cents became, $1.29 or whatever, $2, then I might just take profit on this as well. Excuse me, so I can lower the cost basis. And that was 69 cents credit. So new break even goes from a 575.43 minus 69 cents, so 574.74. Okay, so if I get it called away at 584, I've had this trade open for 2 weeks, and I've generated enough option income to pull in over 920 bucks in 2 weeks. So it takes money to do it, but this account came to me fresh like 2 weeks ago, and this is one of the first positions that I built. So it's already up $1,000 year to date in 2 weeks. If I did that out, say I've got 26 weeks to do that, I'd make about 26K in this account. Like, that's not bad. It's not bad. Obviously, I'd like to, it's not the only trade I'm going to do, but as far as just like generating some income in this environment where I'm not deploying a bunch of capital, I'm going to wait this stuff out. So, anywho, all right, what else we got going on? Clean setup for weeks. Well, what's the setup you're looking for? I mean, I think that the market is sideways. I think we're still dealing with basically a noisy zone where the market is just trying to melt up. I have some interesting podcasts that I listen to that kind of give me a well-rounded kind of macro view, and it's still quite polarizing to consider where people are at. Some people are, again, 60 plus year old, 70 plus year old, former Fed economist, blah, blah, blah. I mean, he wouldn't talk a second about the charts or the markets, but he just said we're like in a recession. If we're not in one, we're going to be in one. Kind of the real hard data that he's seeing on his, and I'm not taking anything away from his deep dive, but if it's not translated into like, I just think that economists need to recognize that this doesn't have to be reality, right? Like, nothing about this has to be real. And unfortunately, there's so many things that can fuel this market higher without the good data underlying it. I mean, we had 10 stocks carry us to all-time highs all of last year. That is why they rotated hard this year. Now we have those same 10 stocks doing it again. We have 9 companies or 10 companies right now that are over $1 trillion in market cap. They will control the market cap weighted indexes like the SPY and the Qs. So, to have this macro bear theme, it doesn't necessarily have to translate into what the markets are going to do. I mean, I think that obviously the markets are forward thinking. If the markets are thinking that things are going to be bad, even this data here, initial jobless claims. Okay. Even this data here, is it spiking to a discerning level or a concerning level? Not really. Now, also, I mean, the next layer of this is, are you questioning the integrity of this data? Because this week is a good example. We have non-farm payroll on Friday, correct? Look at our non-farm payroll. Let's go to the Edge Finder. Okay, let's go to non-farm payroll. And what we have seen lots of the last, 3, 4, 5 months has been crazy amounts of revisions. And it happened through the Biden administration too. But we saw non-farm payrolls come out with these crazy numbers, like hundreds of thousands of jobs, and then be revised really, really low. Where it looks like it's good on paper, and then the next month it's a horrible revision. Was it March of last year? Was it that long ago? This year flew by, if that's the case. Was it March of this year or March of last year? It could have been March of this year because it was just drama city. It had to be March last year, where it was like 818,000 jobs actually didn't happen. Like the numbers were fluffed and revised so badly, it was like 800,000 jobs were not accounted for. So anyway, let's go to labor market data, non-farm payroll, and see how far back we can go. So, I mean, look at this, revisions, right? Revisions, down, up, down, up, down. Like, these are pretty all over the place. Revision way lower, okay? Way lower, way lower, way lower, way lower, way lower. I mean, it's all over the place. So we're going to have more data on Friday this week. What is non-farm payroll? What's the expectation? So Friday's data is U.S. jobs expected to be around 130K. Previous print was 177. Unemployment rate's been pretty steady at 4.2. We have JOLTS job openings this morning. What'd that do today? 7. Did it come in? Should have been in. JOLTS today came in 7.39. So there's actually an increase there. Slightly better than last month. Okay, good. So does that mean we have more jobs available? Okay. Are people going to take those jobs? So anyway, I don't know what I was getting at, other than information is all over the place. I mean, if you are a trader, okay, you follow price. Price action to me is what's going to tell us. If we want to find out, are we in a recession? How about you follow the market? I mean, one thing that's going to be very difficult to do is, timing a top, timing a bottom can be pretty difficult. I think for the most part, you can get a vibe, like, and that's why for these last couple of weeks, I mean, I keep seeing this chart. This is a weekly time frame. I keep seeing this chart, and I know that this market should turn. Okay, based on trading experience, I know this market should turn a little bit, go back down. Okay, now whether that happens now or happens at a slightly higher high, I think we still should turn. Okay. Now, in the past, I might have been a little bit more aggressive on, like, I'm going to be bearish right now. I'm not. Like right now, what I'm doing is I'm just going to wait and see if my patience will play out. I'm looking to see if we get a dip or something that looks reasonable to buy, or a dip that kind of pulls back and kind of resets this melt up a little bit. And then this is where I think the economy would feel a little bit more real. This to me is real, right? We had max ever rotation, tariff drama. We take away some of the sting of the tariff conversation. I saw headlines last night that now what is the U.S. trying to do? They're trying to basically encourage every company or every country in the world by this week to give us some type of agreeable trade agreement. So you tell us what you want, we'll tell you what we think you should have, and then we'll see who comes to the table. I don't know what that means. I don't know if that is like, well, we are saying this because no country is just lining up to just automatically just bow to us and say, we want to do business with the US. I don't know. Okay. But we just did another pause on China into August 31st. So US China has now been pushed out to August 31st. This 90-day window that's up in early July could also be extended. Like, this is what 2025 could be. You start with you snow globe the world and you shake it all up, and everyone gets panics for a second. You feel like you got some systemic risk, and then the threat dissipates. Okay. And so I think that a reality check would be, okay, so the market reflexively came back a little bit, got back into some kind of bullish territory. I think what's going to drive traders crazy is, let's go to a daily time frame. And again, give me some feedback here. But would this drive traders crazy in 2025 if we are down below the 200 moving average with the death cross, right? And then back up above the 200 average with a cross, and then back down below the 200 moving average with the death cross? That would be that. It's very hard to position for that, right? So you have a high, you have a low, you have a lower high, you maybe have a higher low, and this might be the market. Now, that to me would actually be a real market, because we don't know if it's going to be crazy high, awesome optimism. We don't know if it's going to be crazy bad, systemic risk bearishness. But the market can survive in here and have some equilibrium and not necessarily have to go anywhere. But I can trade in that environment. I can still make money. It's going to be less, right? But I can still generate income. So I don't know. I just think we have to be prepared for a lot. I'm trying to be patient. I'm trying to be pretty patient. Today's currency strength, if I can spell it. Okay, so what do we have in currency strength? Well, I'm happy to see that the Swiss is the weakest today, as was the Japanese yen. That makes me pretty happy. The dollar is going back up. I said watch the lows on the dollar. I don't think the DXY is going to go too much lower without having a pullback, right? So the dollar index is still kind of messing around with this 98 handle. Don't be surprised to see the dollar, use this level as a support level, maybe a range bound here. Okay. There's a lot of consequences in the dollar. If we go lower, this is gonna cause a lot of pain and grief in the bond market, which will impact global liquidity. So, I mean, for anyone that's cheering on a weaker dollar, I think there's bigger problems if that is the case. I think you'd almost want to see that. I mean, and I know for currency traders for a lot of years, it's been like, this one move of the year was crazy, but other than that, Forex trading could be somewhat, boring. Like, I say boring as far as like big moves, right? But scalping opportunities, there's tons of opportunities in futures trading and scalping. I mean, there are 23-hour markets, 24-hour markets. There's always opportunities to align. Excuse me. But if we get a channel here or a range, I mean, this is probably a good thing for the dollar. I don't know if this wants to stay back in this range or continue to weaken. But below, I mean, literally below 100, below parity on the dollar is not a good thing. The more downward pressure we have, the more the bond market feels it. If the U.S. bond market is going to feel some pressure, we have a global amount of IOUs that are going to be, it's like, are they still good? Are we still going to have successful auctions? Are we doing mostly short-term auctions instead of long-term auctions? This is the whole weird conversation in 2025 that's accelerated this move towards is gold better? I mean, I don't find these charts. If you can compare, I need to find these charts. Let me actually ask a buddy of mine. Let me ask him right now, actually. What was it? Okay, because what I wanted to show was if I compare the S&P and gold standards, or compare Bitcoin versus gold, or compare the Qs versus gold, or compare, the housing market versus gold, you'll see that it's a very different story compared to just the index versus US dollar. If things are priced in dollar terms, all we've had is a debasing currency and crazy amounts of appreciation and everything to make up for that debasing currency and weakening purchasing power. Right. And I think that's why 2025 has felt very different, where gold has become a really well cemented global asset that is being treated as such. The speculative side and kind of the future of decentralization perhaps is what Bitcoin represents. Right. I'm still pretty optimistic on Bitcoin. I like the potential upside. I don't think it comes without risk. I think there's going to be risk, but the volatility on Bitcoin has gone down dramatically. A pullback of what was 60, 70, 80% is now maybe pulled back within 20 to 30%. I would say probably point for point, it's probably matching the Qs. I mean, we had a pullback here of around 31%, but the NASDAQ pulled back 27, 28%. That to me was a huge change this year in Bitcoin to see that the vol is actually in step with like the NASDAQ. All right, he says I can go SPX. Is it SPX versus gold? Oh, you got to do the math. Okay. So SPX divided by gold. There we go. Or GLD. Or XAU. Try this. Son of a biscuit. All right, I'll figure it out. Anyway, let me bring this up for. I'll save this for tomorrow. I just don't want to derail the session, but the charts are pretty interesting. If you compare, SPX by itself, SPY by itself, Qs by itself, and then you compare it with overlaid gold, you'll kind of appreciate how bullish gold has been and how in asset terms with gold rallying like this, housing prices haven't increased at all because of the increase in gold prices, right? I mean, here's an example. Let's take the average. This is just a little side conversation today, but the average home price in the U.S. I'm going to make the number simple. Let's say $400,000. Okay. The average home price is $400,000. So let's say that the average home price in 2025 is 400,000. Let's say the average home in the U.S. in 2020 was maybe $250,000. Okay, so pre-COVID, before things got nuts, we've had a huge appreciation in home prices. It's the same house, same square footage, same rooms, same bathrooms, same dimensions, but somehow that house is worth that much more. What's 150K? Your house is somehow worth an extra 37.5%. So you mean to tell me that homes have appreciated 37.5% in 4 years? Okay, or 5 years. So what's the average home in the US in gold? Okay, so if you take 2020 gold, so 2020 gold versus 2025 gold, what's that home worth now? Let's look at the home price in gold. For the year, gold was, let's go back to 2020 here. So gold, we'll go to the start of the year. So gold was $1,500 an ounce. Okay, so we'll take the start of the year. We'll take a $250,000 house divided by $1,500 an ounce. So you've got about 166 ounces of gold. So 166 ounces of gold buys a 250K house. How about now? Okay. And remember, home prices have gone up. Okay. But what about gold? Right now at this price, we can even say the start of the year, even though we've gone up 20+%. Right now, I'll do two levels. I'll say the start of the year at 26.34. Okay. So $400,000 over a $2,600 starting ounce, 153 ounces. See what I'm saying? And if we go to spot price right now, $3,300 an ounce, take that same $400,000 house divided by 3350, 119 ounces of gold. Okay, this would be beginning of 2025. This would be beginning of 2020, right? I could do the same thing on Bitcoin. If Bitcoin in 2020 compared to Bitcoin now, how many Bitcoin buy a house? It's kind of nice to know that an asset like this is appreciating. And even though things on paper price-wise are more expensive in dollar terms, it's less than gold. right? It's less than Bitcoin. Like, this conversation is getting more and more real today than it has in a long time, because it's showing that these other assets with a debasing currency with infinite amount of money printing, this is why it's a problem. At some point, you want to have some type of asset that is appreciating enough to give you deflationary prices so things can get cheaper, so people can live better. You know, this is what's so frustrating about things getting more expensive. I mean, you're reading stats right now that people are selling homes at the highest level, but they're sitting in the markets because why? You're trying to get out at the highest price to do what? Sell at a great high, but turn around and buy at a 7% interest rate with a house that's way more expensive in money terms. That makes sense? All right. So anyway, point is, this is a crazy conversation, but I think it's encouraging to know that if you have gold in your portfolio, it helps. If you have Bitcoin in your portfolio, it helps. Dollars are going to be dollars. The fiat system is forever, I'm not going to say it's going to be doomed, but something with accounting, like some type of creative accounting, some type of fiscal reset is likely going to happen. And I don't know how ugly that gets. I don't think the world ends. I mean, my gosh, we thought that this year the world was going to end. We thought that 2020 the world was going to end. The markets have a way of showing some reflexivity, right? But I just think having this in mind is like, this is important. This is an important investment. Bitcoin, although it was risky, 7 years ago, is a lot more mainstream now. It's backed by some of the largest asset holders in the world. Institutional money is still following along, and retail, it continues to grow. Crypto wallets are opening every single day. I'm not nearly as speculative as I once was. I mean, I traded altcoins and things back in the day. I never chased Doge or Shiba. I focused mostly like maybe 5 or 6 coins, and then it was like I rolled everything exclusively into Bitcoin. So all I focus on is Bitcoin now, which I'm happy with. But does that feel nice to know that, if you own gold or own Bitcoin, that things are getting cheaper to buy as opposed to more expensive? Like, look out 10 years and think, this home that I have right now that I just moved into, like this weekend, this home in the next 10 years, is this home worth $1 million? No, I know what I paid for it. It's not worth $1 million, but in dollar terms, maybe it is, but that's called inflation. So anyway, there's my sidebar for the day. Diversify. I think having gold and Bitcoin in the portfolio makes a lot of sense. Do I consider Ethereum? I do. I traded Ethereum quite a bit the last, 7 or 8 years, but since 2022, after the big like deleveraging and reset, I went more into Bitcoin. To me, it was an easier chart to read. I wasn't sure of the proof of concept or the network effect of Ethereum. It's like Bitcoin to me is like the S&P of the digital world, the decentralized world, and also, I mean, at some point you're seeing what's happening now is more corporate bonds. Countries are building, Bitcoin-based bonds. And I think what it is, they're trying to do this. They're trying to run some type of parallel system where you can have fiat and you can have Bitcoin. This can do what it needs to do for the checking account. This can do what it needs to do for the investing and savings account, right? So there's ways to do both. It doesn't have to be like Bitcoin has to replace everything. It's like you can run the world in fiat terms, but you got to have something that's appreciating. You can obviously have gold as well, right? So gold, Bitcoin, dollar, like somewhere the world hopefully has to figure it out. I don't know what that looks like. I just know that it's tradable. I know that this is an important thing to have in my portfolio. So is this. I'll even throw in silver, right? Because in silver terms, I've also seen the same type of conversation, a $400,000 house in silver terms. Let's go to XAG USD. Okay, silver since 2020, look at this. Silver started at $17.78 an ounce. So that same 250K house in silver for beginning of 2020 was how many ounces? That'd be 1790. So we take a $250,000 house divided by 17.90. You're at 13,966 ounces of silver. So we'll just say we'll round up to 14,000. Okay, let's take silver today. And the house prices have gotten more expensive in dollar terms, but silver is at 34.46. So let's go $400,000 home divided by 34.47. Now it's only 11,600 ounces of silver. Okay, and this is now a $400,000 home in silver. Now is only 11,600. So this is also appreciated. Silver has appreciated, which makes this cheaper. Even though the home is more expensive in dollar terms, it's cheaper because of silver's appreciation. Bitcoin, same thing. Right? I know BGP, I'm seeing that. Some experienced traders say, right. And you know what? Look, there's an argument for both. I think that people that don't understand Bitcoin are definitely saying that 10-foot pole. I think that a trader would have to acknowledge a trader, right? Be asset neutral, be strategy agnostic. A trader has to acknowledge the potential asymmetry on Bitcoin. Look, you can go in and trade Bitcoin. Why is this a bad trade? If I take a trade right here with a stop loss here and this thing can go up and make me 2-to-1, why would I not consider that trade? Does this matter if it's, gold? Does it matter if it's a stock? It's tradable. So as a trader, that's what I am. I can make money at Bitcoin. But to me, I consider myself a bit more of a hybrid where it's like I see the benefits of trading Bitcoin, but also holding Bitcoin. There's not a lot of things that I would say I'm super optimistic about. I think we are getting this, I don't know, we're getting like this open reality of things aren't as great as they appear, right? The world, it's like, I don't know, man. And I don't want to sit here and I hate being negative. There's too much crap out there to be negative and too much things to make you worry. And that's what drives all this emotional decision making. It's like, but if you think about what makes you optimistic, I'd like to be able to see 10 years out, 10, 20 years out and know that life can be better, not worse. I just had a conversation yesterday with my sister who's 28 years old. Okay. She is terrified for what her future looks like because she's like, this whole AI thing, do you think it's going to go away? I think she's like, it's going to displace so many workers. I'm like, it is. I know it is. And I'm like, and it's not going to stop. She's like, well, why? It's so bad. It's like, doesn't it change? Would it make things worse? I'm like, not in the US, not in the world. Why? Because what drives financial markets? Profits and greed, And if you can take a company from, a 20% profit margin to a 50, 60, 70% profit margin, guess what's going to happen? You're going to drive all systems go to that 70% profit margin. So unfortunately, humans will be the resource that isn't necessarily needed, but there's going to be something. I don't know. And maybe there's so much profit in the whole AI race that there's universal basic income, right? The bottleneck would be that we can't actually support it. Right. So I don't know if today sounds like a big rant here, but it's like I'm trying to be optimistic. I'm trying to talk my sister into the next 10, 15, 20 years are going to be insane. Technology is evolving so quickly that the only thing that can slow it down is probably our inability to support it. If we build out these data centers, if this CapEx spending goes nuts, it's going to happen. But if we can't support it with better energy, with more efficient energy, then it will clearly bottleneck and will slow the growth. So I almost think we would get in the way of the innovation, but I know those alternatives exist. We all know this, right? We don't have to just rely on oil. It's like there's oil, there's natural gas, there's liquefied, there's hydro, there's geothermal, there's nuclear, there's clean, whatever. There's wind, there's solar. It's like if we harness any of that stuff in any alternative way or make it more efficient, you'd think that we can do whatever we want to make more efficient energy. Now the question is, does that make it cheaper? I don't know. I hope it does. So point is, to be a glass half full investor nowadays, you got to have something that keeps you positive. Gold makes me a little bit more optimistic for the future. Bitcoin makes me a little bit more optimistic for the future, right? Investing in the markets, yeah, I can be more optimistic in the future because I know what they're designed to do. The S&P is designed to go higher. The NASDAQ is designed to go higher. When will they not? If we have a recession. When will we have a recession? Probably when jobless claims. Okay, you go initial jobless claims, continuing jobless claims. If this data starts to trend higher, and this is what we're going to see week to week and see this in the Edge Finder every single week, if this starts to go higher, okay, that is not a good thing. If initial jobless claims and continued jobless claims are starting to trend higher, probably not a good thing. In fact, what is happening here? Is this something that we should be watching? Continuing jobless claims are trending higher. We've had some lows here back in December of last year, back into April of this year. We are starting to see higher levels. Does anyone know that last year, do you know how many tech jobs have been lost? Microsoft has cut workforce. Meta has cut. Google has cut. Apple has cut. Do you think those jobs are coming back? Not. They're not coming back. Why would they come back? If those companies don't have to hire new people, they're not going to hire new people. This is something I'm going to find this. I know I took a picture of this weekend. Let's go here. Let me see if I can find it. I've got a bunch of pictures in here, but I listen to all these podcasts. At the gym, typically I find these data points. So I'm just going to flip through really quickly, and I'll walk through it. But basically, it looks like this: jobs, cuts, and like how many hires on a histogram now are showing job hires. Mag 7 is hiring like nobody right now. Let me see if I can find it. Okay, it's right here. I'm going to send this to myself. Growth in total employment in Apple, Microsoft, Alphabet, so Google, Amazon, Nvidia, Meta, and Tesla. Okay. Fed starts raising interest rates. This is not like it happened overnight, by the way. This is happening since 2022. Okay, so in 2022, those companies with growth in total employment, let me just share this chart. This is a good one to discuss. So here, and I will mail this to myself. All right. Jobs. Send. Okay, let me see when they get the email. I'll share that. It's a pretty interesting chart. Okay, so let's see if this pops in. Come on. Sometimes the Apple phone is slow to send. Anyway, let me go back to it before I lose it. So let me give an example. Total employment growth in the Mag 7. Let's go back since let's go back to 2017. Okay. So I'm gonna keep this up. I write this out for you. It looks like this. This is the chart that I'm going to show you. You have a chart like this that shows total growth. Okay. So total growth, total employment growth in Mag 7. All right. And percentage year over year, percentage year over year. We'll start in, we'll go 2011. So 2011, 2012. Let me see if the email just pops up. If it doesn't, I'll just do this the old school way. 2013, 2014, 2015. I'm obviously going to run out of space here. Fun. All right, let's do this. I'll go 2016 to now. I think I can squeeze it on here. So 16. Okay, then we'll go 17. And we're going to talk about this more on June 16th, by the way. I'll be able to deep dive a little bit more into this, but I just think this is, I just listened to a long podcast last night. I was on the road until like midnight. So yeah, we're going to go after it. So 22, 23, and 24. And I'm not even sure if there's a data point for 25 yet. There is not. Okay. So here are the crazy numbers. 2016. I'm just going to type in the percentages here. So 2016, we had year-over-year employment growth of 24%. 24%. Okay. 2017 was 40%. So it would jump up. Let me do this. So about 24% here, 40% here. 2018, 14%. So down. Okay. Then we had 2020. We had let's skip one. 2019 was 18%. The hell. 2016, 24, 40. It's 14. There, 14, then 18. 14, then 18. There we go. So just a little tiny sliver higher. And then 2020 was a big jump after, jobs were cut. Everyone's going home to work or not work. And then all of a sudden we had a big boom, 40% post-COVID. So another big jump here. So back to 40%. So another big boom in total employment growth. 2021, 21%. Okay. So there, 2022. When do you think companies started to say, we don't need to hire as many workers? We don't need to grow with workers. When did that happen? Oh, I don't know. How about this last bear market? -1. Okay, how about 2024? 2%. Do you think this is going to change? Do you think in 2025 this is going to change? This is my concern. The biggest companies in the world are not trying to hire more people. This is AI now. And this is what I think the future looks like. They're not trying to hire more people. They're trying to do more with less, drive corporate profits, and that is the business model, right? So the days of more people are on the decline. Like if this is what growth looks like going forward with companies hiring like -1% workforce, 2%, 3%, it's like they've been laying off workers for years now. So this is the adapt or die mentality. If you are not going to adapt to what the potential future is with companies not wanting to hire, basically a job available will be taken. That job available is possibly going to require the skill set of what maybe 5 or 10 people have now, and it's one person can do that job because of AI, because it's a productivity boost, right? So, I mean, I think that we should be embracing some type of AI skill set. It's going to be something that's ever evolving. It's going to be changing, but this is a big difference, right? This is a big difference in the future. So that's what I'm saying. Like, I think this is coming for us, whether we like it or not, and I think it's unfortunate, but I think that's the reality that we have to deal with. So that being said, there's my long public rant of the day. I'm trying to be a glass half full guy, but to do that, I've got to have investments that I think can work on my behalf, as opposed to, I need to require an employer to take care of me, especially when an employer doesn't want to hire people. That's a pretty tough racket, right? So I hope that's not the case, that humans aren't necessarily displaced, but I think if capitalism has taught us one thing, it's that greed and profit is above all else. I mean, the amount of power and lobbying that corporate America has to get the nastiest things in our houses, in our bodies, in our environment, because it's cheaper to make and it's easier to make. That's a huge concern, but we've dealt with it for a long time because US has put profits over, humanity for a long time. So anyway, it's you can take it for what it is, whether you want to be optimistic or pessimistic. Like, I think as a trader and investor, you got to be optimistic or else you'll never play this game. If you want to survive these markets, you got to have thick skin. You got to take some punches on the face a little bit, but there's ways to survive. So I want to say I hope things can improve and get better. You just never know. You never know, right? So where we are today, SPX today, we're still sitting on a weekly time frame. Going back to the charts, okay? This is highs and lows. If this market melts up here, fine. I don't think it should, but if it does, I'm not going to fight it. I think that there's some heavy resistance maybe around this round number at 6,000. What happens this week? I don't know if this data is going to be released, but what if it's really, really quiet? So all these countries that we're trying to tell, hey, get in line, tell us the agreements you want, tell us the terms, let's do some deals. What if it's really quiet? Does that change the narrative at all? I don't know, because maybe the US is just going to pause more. Maybe this 90-day window is another 90-day window. Maybe we give countries more time. So I don't know if the markets take that with positivity or negativity. I don't know. So all I'm saying is, from a technical side, And I did this on a bunch of charts here. Actually, let me check one thing really quickly. I've got a couple trades running on SPX. It's been drifting a little bit higher this morning. So let me check SPX this morning. It's kind of back to break even, unfortunately. You piece of crap. So I got one that's up about 30%. The other one's flat. We're at 58.60 right now. 59 is my gamma level. Are we getting up? Where are we open today? 59.30. We getting up to 6,000 today? Guess we're about to find out. So these are my biggest gamma levels. 6,000 is a round number. Are we getting there today? I mean, plus or minus move was not 70 points. I can tell you that much. Yeah, I think that's a stretch. If we get to 6,000, that's a big stretch today. So I've got some sell calls up here around 59.90 and 6,000. I'm just hoping that price will stay there. It's out of the expected range right now, which is good. I might just have to sit on these trades a little bit longer. All right, back to the charts. So let's take a look at this workspace. Chandler, let me know if we got to run here in a few minutes. I'll look at my Discord. If you need to take me out, if James is coming on after me, let me know. Let me go to a couple of charts. I've got Mighty Macro, and I have harmonics and pivots. So between these two workspaces, they can be a little ugly. But SPY, SPX, what do we have going on here that I think a pullback is coming? We have divergence on the MACD. We have a crossover line. We are not quite there, but we are close to overbought conditions with bearish divergence, right? This high. If we're having hidden bearish divergence, that means that price is potentially squeaking out slightly higher highs. But if relative strength is disagreeing that it's hidden bearish divergence, also MACD histogram and a signal line is bearish divergence. Money flow has gone stagnant since this high. If money flow is not increasing again, I think that's a room for prices to decline. Okay. I'm the closer today. Okay. Coffee's for closers. All right. Excuse me. So that's my MACD. So MACD, relative strength, and the money flow indicator. I see just clean technicals on a daily. Why would we be crossing over? Well, because we would kind of run out of momentum. We'd have a lot of disagreement. We're kind of lacking the thrust and the momentum and the breadth to get us there. A weekly chart, maybe there's a bit more room, right? You go to a higher time frame here, weekly chart, what do we have? Well, we have a signal crossover line. We have some positive divergence or convergence rather, and then we have relative strength that was oversold, which we saw that during the April low, and this weekly chart may just keep freaking melting up. And until we get overbought conditions, like maybe this has the opportunity to kill. So the weekly chart gets up to, relative strength hits highs, money flow continues to go higher. So daily chart, weekly chart telling a very different story. Even though we've been sideways for 1, 2, 3, 4 weeks here, if the weekly chart wins out, we are still going higher. The daily chart, I think we have a pullback first. A pullback here in the daily chart does not necessarily disrupt the weekly chart. It just means it's a pullback because this could continue to go higher after a dip and a pullback, right? All right, one more chart here. This one's a little messier, but bear with me. Okay, all I'm really watching here is, let's go SPY or SPX or XSP, right? So look at my zigzag indicator, very common move for tops and bottoms. We finally had a topping point right here around 59.67, that high that we had back on it looks like May 19th or so. That was after the Friday downgrade, the Moody's downgrade, and then Monday was an opening low. That day was a little silly, but that looks like the zigzag called a bit of a top. Is that a guaranteed top? Not necessarily. I mean, we can have obviously like little waves, but if this is any indication of trying to find a high here, what else do we have? Well, if price goes higher, we're getting disagreement in momentum. If price goes higher, we're getting a disagreement with relative strength. Again, price momentum on a daily chart are showing a pullback is likely. Okay, how about a weekly chart? Weekly chart, same thing. So have we disagreed with the momentum yet? No. Have we disagreed with relative strength yet? No. Are we overbought or oversold? No. So the weekly chart's still in the middle. Let's go to the monthly chart just for fun. Okay, monthly chart. This would be interesting because what do we have here? There's a high on the monthly chart. Okay, If we somehow crack all-time highs on the monthly chart, we might see disagreement and disagreement on the monthly time frame. So even if we do have a melt up to these all-time highs, I'm still extremely cautious of a pullback. And in a way, it's like from the technical side and having 55% cash at the sidelines, like I want to pull back to position accordingly. Okay. So, I mean, the monthly time frame, this turns out to be this long wick. Is this a big morning star where we have a decision bearish, big indecision, decision bullish? Is there follow through there? Well, if so, then maybe we do get back to all-time highs. You know, June, July is usually not a disruptive time. June, July is usually like pretty chill. Last year, July was pretty nasty. Like mid-July, we started to top out. We had that Bank of Japan deleveraging through August, and so mid-July into like August 7th, that was the low last year. That was a pretty nasty window. But I don't know if it's going to be the same in 2025. Okay, so between the daily, weekly, monthly, you know, the daily is kind of screaming and begging for a pullback. The weekly, maybe not so much. The monthly, if we do get to highs, I'd be kind of questioning the follow through of those highs. Okay, so just putting some simple technicals into the equation. You know, MACD is showing very different signs on a daily versus a weekly. I think a pullback would be great. I would love a pullback. It doesn't really change the support that this market can have. A pullback is very well supported. Okay. But what would drive, I think, traders crazy would be to see this market give up this support. If the market gives up this support, it's going to be in question of whether or not we can sustain this rally. Maybe the market peaked out here. But I think if we at least hold this level, okay, if we hold this level, okay, fine, more chop. If we come back and fill this level but bounce aggressively, it shows that there's dynamic support right in here that the market's trying to hang on to. Okay, the other way that this just kind of slowly melts up as we hit the highs, then we have a pullback, and this would be a larger head and shoulders. But I just want you to be prepared for a pullback that might be into double digits. If we hit this high and we pull back to a right shoulder, this is left shoulder area, this would be right shoulder area. That's a potentially, 7% pullback. So can we pull back 7 to 10% to overshoot a little bit? Yep. So, 5, 7, 10% corrections could make some sense. Just depends on how nasty they get, obviously. But I'd still look at that as an opportunity to be support, like hopefully support. Big jump in volatility. Maybe there's some good trading opportunities day to day, week to week. But I mean, let me ask you this. How many of you have been having fun these last 3-4 weeks in the markets? And if so, what have you been trading? What have you been doing in here that's been generating daily or weekly income? I want to know. I know what I've been doing. It's mostly day trading. That's the only way I made money these last couple of weeks, other than weekly covered calls. I'm selling some puts here and there on stocks. I'm doing some IV scans, but that's about it. I don't see this market as being like amazingly tradable right now outside of waiting. If you're patient, good. Still patient, still waiting, but it's mostly short term. It's mostly a short term focus right now, and we are right back up near this melt up high that we had with the U.S. and China trade agreement and the first pause. Now we pause it again towards the end of April, or I'm sorry, end of August. So 59.67 again, just shy of that 6,000 handle. We do have non-farm this week. Is non-farm going to be enough to drive the market up to 6,000 and then be a reason that it craters? I don't know. I mean, it craters is a bit extreme. I'd say just corrects. Okay. But I just wouldn't be terribly shocked to see the market reject here, or maybe reject off of a round number, and then we pull back. To me, a pullback is still in this area. That's still kind of a big pullback window for me. I don't know if I'm going to hedge at this high. I think I'm going to hedge at the all-time highs. I think that would be a reasonable pullback. Again, it'd be a cheap hedge. It'd be like a 0.25%. I'll play the hedge, see if I can get a move from, highs around 6,100 back down to maybe 5,800, and see if that pays out pretty well. I could probably put a $500 risk on that to maybe pay me 2K or better. I'd structure a futures trade or structure a, SPY or Q trade like that. Okay. All right. Day trading is the means I can trade with more confidence these times. Yeah, I mean, day trading is fine. I just think there's not much direction you're getting. I mean, sure, there's some individual movers here and there, but when the broader market is really, really calm, you're not getting huge outlier moves in the market. The broader market, like what's the heat map today? I would imagine it's not all green or all red. Look at this thing. I mean, it shows 62% of stocks advancing, but we're not seeing bright colors anywhere. Nvidia's up 3% today. I mean, okay, cool. So we gave it back. I mean, we looked at Nvidia last week. Nvidia post earnings, so earnings up to 143, almost 144. Gave it back the day after. Now we're back up again. So just a lot of chop post earnings. Market makers did a heck of a job just containing price. Didn't go high enough, didn't go low enough. It's right in the middle. Those trying to buy directional plays on Nvidia lost. So it's like that's a perfect market maker play. Let's go heat map here. So it shows that 62% of stocks advancing. You are seeing a decent amount of red in here, but apparently it's only 30 some percent. You just don't see a lot of bright green. Like I'm wondering if there's a lot of stocks today that are less than 1%. Between the 0 and 1%, that's kind of the dark green. So just a pretty chill day overall. Tesla's up a little bit after being down. Broadcom still ripping higher. I think Broadcom's up at all-time highs now. Yep. So Broadcom just eclipsed these highs. What a freaking turnaround that thing was. And all I got was one little ratio spread in a t-shirt to show for it. That's a heck of it. That's like up 80%. Yep. So yeah, I mean, I'm not saying that trading is impossible. In fact, trading is actually good. I like having methods where every day or every week I can generate some income that helps move the needle. That to me sometimes is almost easier than feeling like you're chasing direction. You got to jump in and grab onto the coattails of this big bull move. I kind of love being a trader in a market where everyone looks at it like there's nothing happening. What do I do? And meanwhile, I'm making like $2,000 or $3,000 a week on covered calls. That makes me happy. Like there's always ways to make money. I'm just asking, like, what are you doing right now? I think one thing you shouldn't be doing is over leveraging, over risking, and just speculating on like stuff that's not happening. If you're speculating on direction and you're not getting it, just don't force it. Okay. All right, let's go a little top down here. I'll wrap up in just a few minutes. I appreciate letting me talk today. I was just kind of sharing some ideas. I'll talk a little bit more about this macro stuff come June 16th when Nick and I do a little special mid-year session. For the top down, we're hanging on to some green today. S&P's up about 1/3, 1%. Nasdaq's up about 0.6%. Dow is up a fraction, 0.18. Russell up over 1% today. What's up, Russell? I think I have IWM. I think I have expirations for this Friday. IWM cover calls. Yep, I'll just roll these covered calls on Friday. Probably rolling up another 1 or 2 weeks and grab an extra. I mean, again, when I roll these calls, I'm usually getting about $1 to $2 on the roll. So just increasing my income, increasing my or decreasing my cost basis. Net profit, if I want to let IWM go at 200, I will let it go 200. If I can find a way to roll this up, if I can roll it up to 201 and get a credit on it, I'll do that as well. So I'll be a little picky on those. Okay, but IWM is actually one of the better performing indexes today. That's pretty interesting. VIX is back down again. So the VIX at 17.94, the rule is 16, 17.94. We've got about a 1.12% move, possibly intraday. And looking at the low of the day, are we going 1%? If we get up to 1%, that puts us around the 59.90 to maybe 6,000. If we're going somewhere directionally, I mean, I do have a gamble level of 6,000. I think it's a bit of a stretch to get up over this like 59.70 zone, but we will see. Plus minus on the day is still. I'm looking at my SPX chain here. SPX chain for today. We're still at about a 90+% chance of profit today. So hopefully that maintains based on the option chain that we just kind of, maybe it's just like a slow grind all day. Maybe it goes slightly higher. Bull put spreads seem to be doing the trick if this market just tries to freaking melt up higher. So as long as we're not hitting like 59.90 is my line in the sand today. So line in the sand 59.90 right there. And just in case, I might actually put on a butterfly spread as a hedge. So I've got a 59.90, 59.95. Let me see here. Do I need this? It's going to be dirt cheap, but if I need it, let's find out. Can I do a? Those are all calls. It's going to mess up my freaking trade. So I buy 85. is that 15 wide, 25 wide? So 80 cents to make $2,400. I mean, I don't mind that trade. I don't know if I need that trade today. I kind of actually, you know what? I'll do this instead. I'll do SPY as a hedge. SPY. Let me look at the SPY charts for my gamma levels. Is the SPY going to get up to 600 today? It's growing, it's swelling. We've got a nice 595 level in case that rejects. Here's what it looks like. So there's a pretty nice resistance level right here at current price. If this level rejects, there's a pretty good resistance level. So if we kind of hold this area, we could potentially come to the highs. We have not been higher than this. So if I go back on the chart, last highs are on 595.60. So we're not quite there yet. But if this resistance holds, then yeah, we have a little bit of a resistance level. If we break and go higher, there's not much to stop this thing from going to 600. So I could see us getting there this week. I mean, this liquidity level is growing a little bit. This one has already been tapped for the day. But that would be a pretty cheap hedge if we got to 600. So if I went for today's expiration, I mean, expect to move. It's like we only have about a 3% chance of getting to 600 today. So for this to be a butterfly spread, it's just a hedge. If we get to, let's say, 599, like this trade cost me 15 cents and pays me 185 bucks. If I go a little bit wider, cost me 40 bucks to make 260 bucks. It's, a low probability of profit. It would just be a hedge to cover the cost of my other trade. Do I want to take this trade? Let me find out. I want to see if this rejects here. I mean, there's a low probability we get there by Tuesday. Like today's end of day, this whatever, 4.5 hours away. It's a 1% move. We go another 1% today. Seems to be pretty slow. Anyway, if I did this trade here, I would net out about 50 bucks if I win. If I don't take the trade, then I'll net out about $110. So that's the question, is like, if I give some back to at least kind of guarantee some profit today, then I'll take that hedge. I'll let that marinate for a second. All right, VIX is down. SPY crossing 595. Let's see if there's some momentum there. Previous highs on the SPY right around this 595.50 level. So is price going to respect this high from 2 weeks ago? We'll find out. What else? Dollar, as I mentioned, be careful on selling dollar into those lows. This is what I was looking for on euro dollar. So euro dollar was up to 14.50, about 50 to 100 points off my profit target. I'm still going to hold this thing. I'm up 180 pips right now. I'm just going to hang on to it. Oil, looking a little bit more upside here. Natural gas, 1671. I've got covered calls on the 17. Gold, okay, fine. Probably just consolidating between this like 31 and 3,500 zone. I mean, it's probably another spot to be building and accumulating some gold. Silver, what an awesome day yesterday in silver. We are getting a nice surge to these upsides. I hope this thing breaks. I've said that now for weeks, but if we break this 35 momentum, I think silver has a really nice catch-up trade that can outperform gold, and silver can run. Okay, silver looks pretty darn good. Bitcoin, getting a bit of a bid, possibly struggling at these highs, maybe some accumulation back in these inefficiencies, 101 back to 97. If we're really lucky, I think Bitcoin pulls back between 92 and 87. Okay, I mean, if we're really lucky, although it'll be a little discouraging to see this thing range bound, but if we pull all the way back to like 80 and 75, I think that's a great accumulation spot. But a higher low would be pretty cool. Higher low in here or a higher low in here, I would still be looking to add some dollar cost averaging into Bitcoin. MicroStrategy, getting a nice little bump. That's good. I need this thing to be above 2 levels. I need this to be above like 3 10, and I'll just keep rolling that for income. The other one is a bull call spread, and I think I need that to be above like 375 or maybe 390. MicroStrategy, 375 by 390 right now. That's up about $300. That potentially pays, if we're greater than 390 by the end of this year, then this is paying close to $1,000. I've got that on 11 accounts. So that's a nice little income trade on some MicroStrategy. Coinbase, fine. If we get some pullbacks and gap fills, I'll probably do some ratio spreads. Copper, I'd love to see this little lottery pick that I did. It was like a $90 risk for $1,400 if it stays in between my green lines. Japanese yen getting weaker today. This is fine. Remember, this is still to me a head and shoulders. Japanese yen, left shoulder, head to neckline, right shoulder. If this accumulates more, I mean, this could be a problem of if the market's going to go into a downturn, maybe this Japanese yen gets stronger. If global yields continue to rise, maybe this yen gets stronger, right? I just don't know if the Japanese yen is going to be a blind spot in everyone's trading plan this year. It was a blind spot last year. Could it be a repeat this year? So just I don't want to be ignoring the fact that maybe this Japanese yen and the yields going up to like 3-4% for Japanese 30 and 40-year bonds, that is attracting way more money returning to Japan versus being used in the US. Because if you had negative interest rates, you are not putting money in Japan. If you have now 3 to 4% interest rates with a safe haven banking system, that money's going back to Japan, right? All right. Anyway, that's my trade to hold FXY long, EWJ, just off these recent highs. This is my Nikkei minus the bottom 15%. DAX, just off the highs. I still want to get a pullback on the DAX. I think this looks pretty good. This is a lot of Eurozone spending that hasn't happened very often. FTSE, same thing. If we get some chop and consolidation, this is still very well supported around like 84, 8,500. Argentina, fine. I'll probably just I'll consider this one at the 200-day. China, still choppy, looking okay. Brazil, fine. Latin America, fine. Mags up a little bit, probably carried mostly by Nvidia today. Apple is up slightly. Amazon up slightly, but red candle. Broadcom ripping higher. This is over $1 trillion company now. Google hanging in there above 150. Meta, nice little surge yesterday. I still would love to see some pullbacks on Meta. It's just expensive. Microsoft, I mean, nearly at all-time highs again. Netflix, just off all-time highs. Nvidia again, but just in the earnings chop, but getting higher. Tesla, better on the day after a 3-day pullback. Berkshire, pulling back to the 200-day moving average. Bonds, okay. We kind of put in an intermediate bottom here around 83.30 on TLT. I think the pressure continues to mount. Look, there's about a 4% yield on TLT. Is it good? I don't know. It's not good if price goes down another 10%. It's a wash, right? I mean, if you get a 10% drawdown with a 4% yield, it lowers volatility, but you're still losing on bonds. So I don't love this trade, which is why I'm actively like selling calls in a diagonal spread to try to lower this. My expectations on bonds is just stay stable and let me lower my cost basis to get out of this trade. I've got a decent amount of contracts on the diagonal spread. I'm not trying to look to, if we were ripping to 96, 98, 100, I would make a lot more money on TLT. I don't love this trade. So I'm just trying to work my sell call side of the diagonal spread lower. 10-year yield, still super sticky. Yields are not coming down. Fed's not looking to do anything this year. Maybe they cut in September. Maybe they cut in September. Maybe they don't. That's also going to be an interesting surprise this year if the Fed doesn't do anything. Podcast I listened to last night. This is a former Fed economist talking about it's not anything that you don't already know. It's that the Fed is reactive, right? The Fed is always late. It's always late. It's always late to tighten too much. It's always late to loosen too late. And this gentleman's argument, his name is Lacey Hunt. His argument was that the Fed is already behind, and what is happening with like the money supply going up, that was really a front run of tariffs, and that realistically, like money supply is decreasing and numbers don't look as good, and the Fed's going to be behind again to possibly have like a reactive cut like they did last year. Now, if the bond market reacts adversely to that, like it did in September of 2024. It's probably not a good thing to see these yields go down. Like these yields would not go down just like they did last year. Fed cuts rates, and what do the yields do? The opposite. So that and I said that this year. That's my biggest concern this year is that the Fed cuts rates September onwards, and we're up here at a 5% yield. So do we drift to 5% and then cutting rates starts to bring it back down, and we're still at higher levels? I mean, that's that big refinancing air pocket that everyone's worried about in 2025, because by like September to end of year, everyone that needs to refi is potentially facing a huge increase in refi rates. You know, I mean, homes during COVID, you could get a sub 3% mortgage. Now it's 7, right? If you're borrowing for a business and you're borrowed at 1% for PPP loans, now you're paying back at 5 or 6 or 7%. I mean, companies can't afford that. So anyway, we'll see. All right, currencies. Let's do a quick jump in currencies. Dollar and CAD on top today. Pound just in the trailing in third. We have the Swiss and the yen weakest, so safe haven is kind of low on the day, which I'm totally fine with. My currencies, I still like my Swiss pairs. Aussie Swiss still watching. Can I get another surge like this little run, little pullback? Do we run up into this cluster and 200 moving average? I might take some profits there and then reload. So I'll hang on to that one for a little bit. My Aussie New Zealand, I might just have to dollar cost average in to lower this take profit. This is a small entry. I'm just going to probably buy this thing more and then hold out for this 106 or I mean the swap is now positive to hold Aussie New Zealand long. So I'm going to throw in another trade and see if I just take small trade, probably a 4999 unit size, and then start doing a 5001, a 5002, 5003 over here. Unit wise, I'm going to get way bigger. If we come back down to lows, I'll get way bigger. And I'll position this one. I'll probably put a 1 or 2 standard lot trade on Aussie New Zealand if I can scale into it. Aussie dollar, I still think a pullback is coming here. CAD Swiss, let's get a run up to this cluster. Yen pairs, they're not my favorite. Euro Aussie, Euro CAD is still chop suey, but if you sold this thing high enough, you're okay. Euro Swiss, hopefully we're making our way back to like 96. My charts are frozen. Cool. All right, let me see what the timestamp is on this SPX. Are we still in profit? Are we not in profit? So back up in profit, back up in profit. I'm trying to get this one to like 50 to 60% profit. 50%, it's like I don't want to be greedy. I know the mechanics of this trade. I don't want to hang on to it all day necessarily. So we'll see. I'll give this like another maybe 30 to 60 minutes and see where it's at. Okay, there's my Euro Swiss. I'd like to see Euro Swiss get back to 96 and change. Euro Pound, nothing. Euro Yen, nothing. Euro New Zealand. To me, this is support off the 144 200 moving average. Euro Dollar, I'll wait this thing out. This could be consolidating. So if it's high, low, lower, high, lower, low, maybe some of that. Maybe this thing comes all the way back down as well, and I build this up and it goes back to retest the high. I'm going to be patient on this one. It's not a big deal. Pound Aussie, nothing. Pound CAD. If you sold this thing nice and high at 87, that was a pretty good trade. I think this is still a range bound. Don't let this thing go too much higher than 88 though. 8800 is probably my stop area, just above that. But if it stays committed to this resistance, then we could roll down to like 81. Pound Swiss looking a lot better. If you're holding long Pound Swiss, I still like the 1250 to 1350 window looks pretty good. Pound Yen, nothing. Pound New Zealand, nothing. Pound Dollar somehow just keeps grinding. I'm not trading this one yet. If we break this trend line, if you're watching this one carefully, maybe breaking the trend line is a little sell trade. I'd obviously want to sell it as high as possible. I'm not scaling in to anticipate this one. New Zealand CAD, still love this trade. Give me a pullback here and then give me a pullback here. Level 1, level 2, look for a swing. Aussie CAD, very similar. New Zealand Swiss holding. Can this thing get up into this cluster, this support, this 200-day moving average? Again, nice chunk of profit. Do I make more getting up to like 50, 5,000 or 5,100? I'm hoping this is all a big swing for 1, 2, and 3. I want to take that swing to ultimately take my profit on New Zealand Swiss. Similar to Aussie Swiss. New Zealand Yen, nothing. New Zealand Dollar, wait for a pullback. I think a 58.50 or maybe in this like open space. If I miss this trade, it goes up to 63.50, fine. Aussie CAD, dollar CAD, not chasing this one. I will only buy this one probably down here. And that's about it. I kind of want to see this like maybe just grind. Maybe it's a falling wedge. It's a really tricky pair sometimes. We got really obvious support. Sometimes it doesn't find it. We have obvious resistance. Sometimes it gets messy. So let's see what happens. Maybe this is a bit of a falling wedge. One trade that isn't terrible would be if this does kind of a falling wedge pattern and we get back above 3,900, This could be a swing trade bottom, and we could go right back up to the highs. This is a pretty large halfway point, which is a lot of support resistance. So if we hold this pattern, get greater than 1.39, then we might be putting in a low that we could swing trade back to the highs. So I might watch that for potential trade. And I think that'll do it for today. So thanks for letting me be your closer. Thanks for letting me rant. Appreciate everyone listening and being here today. And we'll come back and do it again tomorrow. All right, thanks, bye.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. From all of us at A1 Trading, have a great day, and we'll see you next time.